The European market open. A minute to go until the start of cash equities trading. I'm Anna Edwards in London with Tom Mackenzie.
And here are your top stories. The last flight out of Kabul, the US pulls its final troops from Afghanistan after 20 years, ending the nation's longest war. China's slowing recovery. PMIs show the service sector is back in contraction for the first time since February 2020. And EU travel curbs. The bloc recommends new restrictions on US travellers in another blow to the tourism industry.
Lots to talk about then. Good morning to you, Tom. 20 seconds or so to go until the start of the European equity trading day. And European equity market futures, a couple of things going on here, pointing to the upside. But of course, London has to play catch up because London was closed yesterday. FTSE futures up by 0.3%. Other European equity market futures, though, also pointing to the upside by 0.25%, 0.3%, that kind of move being factored in then for the start of our trading day. So, Tom, lots to look out for. The Asian session has become increasingly positive, actually, as we've been going through it. What do you see at the start of the European trading day?
Yeah, a bit of a turnaround when it comes to those Asian stocks. The sell-off that we saw in Tencent, as you were highlighting towards the end of last hour, retracing somewhat, maybe as investors realise that those policy measures around online games may not be as significant to that company as some had expected. So a bit of a turnaround in the HSI as a result of that move on Tencent. There's still, of course, concern about that data in terms of the economic recovery in China. Now, the close in the US, another record. And here in Europe, you're looking like we're going to be closing the month for a 7th straight month of gains, the longest winning streak we've seen since 2013. The FTSE 100, of course, was closed yesterday. So currently here in the UK, you're looking at a flat open just in the first few seconds. Slightly more positive picture when it comes to Germany and the DAX. You can see gains of 0.3%. France, the CAC 40 is flat. So slightly more positive GDP numbers coming out just in the last 15 minutes or so. Inflation as well, CPI and PPI in France ticking up. The Italian FTSE MIB is up just 0.1% as well. So taking that positive cue from Wall Street, again, a bit of a mixed picture when it comes to what's happening over in China. And we continue to look ahead to the economic data out of this part of the world, Asia, and of course the jobs numbers over in the US come Friday.
Yeah, absolutely. Tom, let's talk about some of that data. The European equity markets opening to the upside. That's after Chinese PMI data showed the country's economy took a stronger than expected hit from the Delta variant. Non-manufacturing PMI contracted for the first time since February last year, while the manufacturing gauge was slightly lower than estimates. Joining us now is Jeff Yu, Senior Strategist for EMEA Markets at BNY Mellon. Jeff, very good to speak to you. So this is the start of the European equity trading day, and we are making gains. We are moving higher across these European equity markets, and Asia seemed to manage to shrug off some of this weak data from China. But worth just dwelling on it for a moment, perhaps. What did you take away from this PMI data out of China, where the services number looked to really be quite a disappointment, and even under the hood, the manufacturing side of things showed some weakness?
So two things here. One is we've seen an aggravated result due to the problems with COVID that China's had over the past couple of weeks or so. I think it's turned a corner, so the country will be desperate to turn things around in time for the brief holiday season around October. So that's the first point. The second point, even if we didn't have that new wave, I don't think Chinese consumers would have been the driver of the domestic recovery, let alone the global recovery anyway. They have been soft for a while. Chinese PMIs have actually been softening since April in general, and there have been fears of a cyclical slowdown throughout the second half of the year. We've been seeing it in commodity prices and on the part of companies globally exposed to China. So I think that is the concern up ahead. Are we going to see a divergence between a stable or recovering Europe and the US while China continues to drag Asia lower? I think that's going to be very important for asset allocation up ahead.
Okay, Jeff, we definitely want to draw you on that bleed over from China into Europe, but I just want to get your views on the policy stance out of Beijing. The PBOC, arguably, some might argue, playing a rearguard action amidst this slowing data and the regulatory push. Do you expect more policy initiatives from Yi Gang?
So policy initiatives from the PBOC will continue. They've been clear about that throughout the last few months or so. But here's the true issue. I think in March at the MPC, when China signaled fiscal restraint, and the PBOC also signaled at that point was willing to loosen back or to dial back the stimulus a bit. I think that was where the original policy issues have started to surface. I mean, right now we're having this debate in the UK. Is it time for Chancellor Sunak to start to dial back fiscal as furlough rolls off? Whereas in the US we have a new infrastructure push coming through now. Is probably not the time to have fiscal and monetary stimulus being withdrawn, but that was done very early on in China, and I think we're seeing some of the negative after effects of it. And you couple that with a new wave of pandemic, even though it was relatively contained, and now we have the weak growth numbers as well. I think it's a bit too late for another fiscal response heading into a year end, but I'd be more than happy to be positively surprised to the upside on that.
Okay, so clearly the fiscal and monetary response out of China is going to be of relevance to that economy and also the global economy, Jeff. We've got quite a tepid session in hand, it seems, here in Europe. Worth noting that, up just 0.1% on the FTSE 100. The DAX going a little stronger, and the CAC fairly entirely flat this morning, so making very modest gains. You make the point that China would have to recover first, Jeff, before there is any prospect of rebound in Europe. Talk us through the linkages as they stand at this point between these two economic giants.
Again, two major concerns. One is China is still going to lead the cyclical side for Europe. If we look at on Friday our own iFlow internal custody flow data, which were the markets in equities which faced sales, and they were based in Europe, and also those with high linkages to Europe and China. So that's just the cyclical side of things. We look at UK, for example, the FTSE 100, 70% global earnings exposure. If China can't drag the global cycle higher, then it's going to be a problem for Europe as a whole. But on the other hand, hopefully Europe needs to rebalance its own economy as well. So we look forward to the German elections in September. Can the result yield a strong reflationary push driven by domestic investment, by the fiscal push? And we have NGEU funds flowing into Italy across Europe as well. So I think these two things hopefully can start to offset each other a bit. The domestic side in Europe is being underappreciated by markets. So I think that's where some value can resurface. But again, from an asset allocation point of view, you really want to focus on the domestically exposed European names rather than those with exposure to the global cycle, with exposure to the Chinese consumer, because I think that's going to be tepid for a while yet.
Okay, interesting, Jeff. So domestically focused European names. Can you flesh that out for us and give us some specifics on which areas, which sectors would align with that view?
So I think two main sectors. One's those focused on domestic investment. We know infrastructure, that is a major concern within much of Europe as well. So, and now linking up domestic infrastructure investment with the ESG complex, and we know how important a component that is for the entire European budget over the medium to a longer term. So I think that's going to be very important. And secondly, European consumer, as long as there are no new lockdowns, with wages rising in Europe as well, relatively tight labour markets, if real income begins to rise, we have CPI today in Europe, so I think the headline number is going to be quite high. But if real incomes can be sustained thanks to a tight labour market, then I would expect the domestic consumption sector as well to actually rise and start to raise European growth paths. So it's going to be a while, and again, markets tend to always take European reflation prospects with a grain of salt, whereas with the US and China, they jump on the earliest signs of reflation. So I think that's where mindsets from investors really need to change a bit.
Okay, yeah, the reflation mindset in Europe is certainly in a different place then, given historic battles. Let me ask you about the banking sector in Europe or globally, Jeff, and where you see that heading. I'm asking that because it's the banking sector that is the biggest negative weight, the biggest drag on European equity markets in today's session. We're actually flat now across European equity markets, despite expectations for a move higher. But it's HSBC that out of the big banks seems to be pulling us the lowest, down by 1.4%. So that clearly not just a European story, but a global one, a Chinese one perhaps. Where do you see the banking sector pushing to next, Jeff?
Well, again, from a profitability point of view, it's just going to be a story of yield curves, right? And here's one of the issues with normalization. So even if we put the current short-term concerns on growth to one side, we saw what happened in the US as soon in June and July as Fed taper talk, as normalization talk started to actually push through. We did see some flattening the long end of the yield curve, and because if policy normalization is going to work, then you're actually restraining the economy, and then you're going to actually curtail credit demand up ahead, which will impact banking profitability. So I think that's one area where Europe might find itself in a bit of a sweet spot, because we do have the forward guidance from the ECB, so anchoring growth, anchoring policy assumptions from the front end, and up ahead, if we do get that reflation wave and coming through that investment wave, then not only can this drive up credit demand within the private sector, but we can get that steepening in the Bund curve and in wider yield curves as well within the Eurozone. So I think that could be a signal for better profitability up ahead. But again, we need that to be kickstarted from the governments and from official sector initiatives to really boost growth, to really boost investment. That's basically the savings surplus in Europe that has not been recycled into investment, which has impacted banks. Let's hope that changes up ahead.
Okay, so a dovish ECB and the prospects of increased investment in the Eurozone area. Jeff Yu, thank you very much. You're going to stay with us, senior strategist for EMEA markets at BNY Mellon. Okay, coming up, markets continue to embrace the Fed's dovish taper tilt, and traders are awaiting key payrolls figures Friday for further guidance on the economy's strength. We're going to discuss that next. This is Bloomberg.
You can now fly into the UK from the United States. What about some reciprocity?
No, so the opening up by the UK government was terrific. We saw, in fact, the day that it was announced, we saw our daily new bookings triple between JFK and Heathrow. So that was great. And as a US-based carrier, honestly, most of what we're going to sell is going to be in the US. So that was great for JetBlue. The US government should open up. There is no reason not to. You can fly from countries that have much higher COVID infection rates, but you can't come from countries in Europe where infection rates are much lower. That is not a risk-based approach. When it's going to open up, I couldn't tell you. It's something that we and the other airlines in the US continue a dialogue on with the administration.
By Christmas?
I mean, hopefully even sooner than that. But of course, I don't really know. It's really hard to predict how they're thinking about it.
Happening on the ground right now, just in terms of consumer price tolerance?
We see a strong consumer right now, and you can see that even in the early starts to back to school and back to college season that we're really pleased with. And I think if we step back and look at the quarter, we see the evidence of that strong consumer.
The July jobs report was strong.
This is an across-the-board favorable report.
More money, more hours, and more people working.
Wages up.
We're seeing our economy moving forward.
Unemployment down.
The unemployment rate declines by 0.5%.
But will Delta hit the brakes on the momentum?
We could still see the consumer become a little bit more skittish.
A lot of kind of negative surprises, focused really on the Delta variant.
Tune in for the August jobs report, Friday on Bloomberg Television and Radio.
Okay, welcome back to the Open. We are 12 minutes into the European trading day. Here are how things are shaping up. A bit lackluster here in European markets, just very modest gains across the benchmark of about 31 points. The FTSE pairing some of its earlier gains just a few minutes ago as well. So that is a look across the board. It seems to be that there's a lack of conviction here in the European markets after our 12th record close over in Wall Street. You're still, though, looking at the end of this month, the European stocks are likely to have notched up 7 months of straight gains, the longest streak that we've seen since 2013. But for the moment, a bit of caution ebbing into these markets.
Yeah, a bit of caution on those markets, and it seems to be being caught at the flat line, really, across European equity markets by banks to the downside, basic resources, though, to the upside. Let's have a look at some of the individual movers, leaving those two sectors to one side. Healthcare supplier Ambu, the biggest gainer on the stock 600 out of the gates this morning, up by 7.7% for this Danish company. This after the CEO buys 26 million Danish kroner worth of shares. That, according to some analysts, is a fairly good signal. Interesting to focus on the travel sector as well, given news flow, Tom.
Yes, this is something we were expecting, was teed up, and now we got that vote in Europe, in Brussels, yesterday being announced, and that is impacting the travel sector here in Europe. So they will be restricting, under this vote, they've agreed to restrict US travel to non-essential travel will not be allowed into Europe. It is down to the discretion of individual states, but you're seeing this playing out for stocks like Wizz Air. You can see down almost 3% as a result of that vote in Brussels.
Yeah, and we could have picked EasyJet or IAG or Lufthansa, Ryanair. Interesting to see it's not just the big transatlantic carriers, US into European Union, that are under pressure. It is even the low-cost ones that don't even fly across the Atlantic. Let's talk about Prosus as well then, Tom. We had thought that perhaps we'd see some downside for this one because of Tencent and its shareholding there and the crackdown on games companies over in China. Well, Tencent recovered and Prosus has done a deal. So Prosus doing that deal to buy the Indian payments company BillDesk for $4.7 billion, and that sees the Prosus share price moving to the upside. Let's go to Bloomberg Business Flash then. Here's Ritika.
Thanks, Anna. Bloomberg's learned that Apple will add at least 2 emergency features that will rely on satellite technology in its future iPhones. We're told they will allow users to send texts reporting major emergencies to first responders and contacts in areas without cellular coverage. However, sources tell us even if Apple's next iPhone has the hardware, the feature is unlikely to be ready before next year. Zoom tumbled in late trade after its sales forecast, fell short of some analyst estimates. That's raising concerns the company will struggle to maintain rapid revenue growth as workers and schools turn away from remote meetings. The California-based company says revenue will be just over $1 billion in the current period and $4 billion in the fiscal year. And shares of Robinhood, Charles Schwab and Virtue slid after SEC Chairman Gary Gensler said that a full ban of payment for order flow is on the table. Gensler said that the business model is an inherent conflict of interest. The issue has been in Washington's crosshairs as policymakers scrutinize complex Wall Street practices that have contributed to that meme stock frenzy. And that is your latest Business Flash, Tom.
Ritika Gupta, thank you very much indeed. Okay, one of the leading global critics of the Fed's 2013 taper tantrum episode is now worried that the central bank could fall behind the curve as it gradually removes COVID-era monetary stimulus. Former RBI Governor Raghuram Rajan spoke to Bloomberg following Jackson Hole.
But there's one big difference post-pandemic, which is the enormous amount of fiscal spending. That wasn't there. My worry is if they don't fully account for these new forces, they may be behind the curve.
Okay, investors are now looking ahead to Friday's jobs data for further clues about the strength of the US economy. That's as the Delta variant continues to cloud the outlook. Still with us is Jeff Yu, Senior Strategist for EMEA Markets at BNY Mellon. Jeff, do you have clarity on the taper timeline? How are you mapping this out? Okay, we just dropped the line. We just saw the line drop. In fact, some technical problems with Jeff Yu from BNY Mellon, but we will hopefully get him back soon. Yeah. We know that the forecast, by the way, for the jobs, of course, coming Friday, which is where a lot of the focus is for a print of 750,000. Of course, it's varied quite significantly in terms of estimates meeting the real numbers. But of course, that is where the focus on and how that plays in to the view from the FOMC and Jay Powell as to how quickly they need to get this taper underway. We were talking to Kit Juice a little bit earlier from SocGen. He was saying it's going to be really confusing to watch this jobs number come in on Friday. But as you say, the mid-700s seems to be the estimate, 700,000s. That's coming off a higher number the last time around, or the mid-900s or so number. Really interesting when you look at the very long-term data. I mean, look at charts on the long
long-term picture for the US jobs market. All of the movements we're seeing now really fail to show up on the charts these days because of the extent of the volatility that we saw in jobs numbers over in the US during the height of the pandemic. But interesting to see where we settle out then and where the next trend develops. Let's get back to Jeff Yu, who I think we've re-established contact with, senior strategist for EMEA markets at BNY Mellon. Jeff, Tom was just asking how you see the taper timeline working from here then. What are you penciling in now, having heard from Jerome Powell?
Well, we've had the view that towards year end, November, that kind of a time as an announcement for things to commence. That is well within the current timelines. We don't see any reason to change that at this point. The question right now is, whether it can be derailed by new variants or basically how the pandemic is managed. What's striking is if I had to name the one event over the last 2 weeks in terms of volatility for policy action, it was actually what happened with the Reserve Bank of New Zealand. The markets headed into that meeting, even the day before, with 50 basis point hikes, some talking about 75. And then we had the lockdown being announced, and then the RBNZ just totally went flat, and that totally appended things. And then we suddenly went from who's next in terms of a tightening policy into who's next, whereby they wanted to tighten policy, but now worried about the pandemic, they're actually going to dial things back. So I think that is going to be the challenge up ahead. And it also means the governments which can keep societies open with minimal disruptions to the economy, they will be the ones which can complement the central banks in advancing the cause of monetary tightening. But I think we're going to see more volatility up ahead, whether this can actually be executed.
Jeff, what does this mean then for the yield curve? You touched on the fact that, of course, the yield curve has been flattening. What do we need to see sustained? It could be gradual, that's what investors prefer, generally gradual increase and steepening of the yield curve. What are the elements, the ingredients that need to come to play to make that happen?
Well, I think it needs a sustained rise in investment demand. And right now, I think we are coalescing around the view that apart from governments, apart from renewed fiscal stimulus, especially with rates where they are right now, the front end and borrowing costs, this is probably not going to happen. So we talked about how that's needed in Europe, probably new and sustained infrastructure boost and fiscal spending in the US is going to be needed as well. And if we don't have that, I'm afraid the long end of the curve is going to struggle either due to the restraining effect of tapering or policy tightening in the short term, or it's just back to route one, whereby, we don't think inflation or reflation is ever going to happen again. We're on a structural secular stagnation trend, which means long end yield curves are going to be depressed for some time. That is probably the more worrying part of it, because it doesn't imply any short-term bounce either. But again, where is the demand going to come from? And if it's not going to come from governments, then we just don't have a source at this point. So I think in the short term, people are going to rely on fiscal to get the yield curve moving again.
Jeff, thanks very much. Thanks for joining us. Apologies for the technical issues. Jeff Yu, senior strategist for EMEA markets at BNY Mellon. Coming up on this program, Merkel's CDU holds its economy day as the party's candidate struggles in the polls. We're live in Berlin next. This is Greenback.
Welcome to El Zonte, known as Bitcoin Beach. This little surf town on the coast of El Salvador is one of the first to go full crypto. Yep, you heard that right. Everything from groceries to coffee to salaries and community projects can be paid for using Bitcoin.
It's actually been crazy how fast it has caught on and how useful Bitcoin's been for, everyday people.
Just to buy something as simple as a cup of coffee can be done quickly, painlessly.
Lots happening on Wall Street.
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
I support the new framework.
We need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
Right now, about half of U.S. households invest. We'd like to get that number up to 95+%. Investing should be as ubiquitous as shopping online. It should just be something that people do.
There is wide disagreement on whether we've seen the worst of the Delta variant in terms of the upsurge in cases. Where do you fall on that?
So I see that the curve is continuing to go up, which is worrying. What is making me really nervous today is that there is this accompanying surge in deaths as well.
Welcome back to the European Market Open. 23 minutes into a fairly lackluster session here for European equity markets. Certainly the London market a little underwhelming today. Overall, making very modest gains, up 0.1% or so. Now, the top brass of Merkel's Conservative bloc is holding their annual economic summit alongside some of Germany's key business leaders in Berlin today. The economy is traditionally a strong suit for the CDU, and this is an opportunity to put those credentials on display as they slide in the polls. Bloomberg's Maria Tadeo is in Berlin with details. So Merkel's Conservative bloc, Maria, good morning. Sliding in the polls, will they be able to convince German voters about their economic credentials today?
Well, Anna, that's what they're hoping, and that is really the card that they're clinging onto. You know, is the CDU saying we are the party that works for the middle class, we're the party that works for the German industry, and we want to continue this success story for the German economy going into the future. The problem that they have, however, is that while they say we won't increase taxes, we're also going to cap the corporate tax, they're going up against the finance minister, Olaf Scholz, who to some extent has taken the credit for the stimulus when it comes to Corona. He's also been the lead of the furlough scheme, which worked really well in Germany. And he was also the man who went to the flooding site and said, we're going to spend, it doesn't matter how much, but we're going to rebuild the areas that were badly hit. And this is the same region in which Armin Laschet at the same time was caught giggling and laughing around, and that's continued to haunt him. So that's really a competitor that's very hard to run up against. And if you look at polls, again, it does cement that lead that we've seen from the SPD. The one that we got yesterday showed the SPD, Olaf Scholz, and the Social Democrats now up 5 points over the CDU. So this is now a competition that's not just tight, but it's clearly signaling that this is a firm lead for the SPD now.
Maria, if we do see a CDU-led coalition, it is still a big if, it seems, what will that mean for German fiscal policy?
Well, look, what they say is that this will be your traditional orthodox center-right agenda. This is about putting fiscal policy and the debt and deficit back on track to cut down that no new debt. The debt brake will still be something that features highly. But the problem here, Tom, of course, is that if you don't increase taxes, you also say that you want to modernize the economy and that you're not taking on new debt. Essentially, you're betting that you have to grow very fast and very quickly in order to make up for that gap. The other issue, of course, is that the CDU says we don't want to take new debt because we want to be responsible for the future generations. But if you look at polls, and this is where it gets very interesting, the young Germans will tell you we do want to spend if that means modernizing the economy, going greener, and also going more digital.
Okay, Maria, today with the latest in terms of German politics as we lead up to that vote, of course, at the end of September. Thank you very much indeed joining us out of Berlin. Coming up, officially over the last flight with US soldiers leaves Kabul, ending a 20-year presence in Afghanistan. The Taliban calls for good ties. We discuss that next. This is Bloomberg.
China has been focused for a long time now on catching up to the United States in space when it comes to space exploration, and they've really made a couple of really impressive achievements. For instance, in May, China landed a rover on the surface of Mars. It's only the second country after the United States to manage to do that. In June, China sent astronauts to its space station, which is still under construction. China is not part of the International Space Station because the United States worked to exclude China from that. But instead, the Chinese are working on their own. That's scheduled to be in full operation, I think, next year. The Chinese have really come a long way in space. That said, all of that's run by the Chinese government. There is a role for Chinese companies to play in the space program. They're not being as front and center, say, as Elon Musk with SpaceX or Jeff Bezos with Blue Origin. China's companies are playing a more supportive role, I think it would be a fair way to say it, working on things like satellites, rocket launch operations. They're leaving the really big, sexier items when it comes to space exploration, leaving those to the Chinese government.
The growth story in cannabis remains very strong, even after the sort of loosening of the pandemic. There was a worry that there might be wallet spend competition, but so far the cannabis sector seems to be holding up very strong.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Welcome back to the European Market Open. We are 30 minutes into our European trading day. Here are your top stories. Last flights out of Kabul. The US pulls its final troops from Afghanistan after 20 years, ending the nation's longest war. China's slowing recovery. PMIs show the service sector is back in contraction for the first time since February 2020. And EU travel curbs. The bloc recommends new restrictions on US travelers in another blow to the tourism industry. So lots to talk about as ever, Tom, when it comes to these European equity markets. But the start we've made this morning to Tuesday's session, a little more lackluster than maybe the futures had suggested.
Yeah, a little bit unconvinced, these markets at this moment. The top line, of course, is that here in Europe, certainly in the US, markets remain in record territory. But a couple of factors coming into play for investors here. Anna talked about those EU travel curbs on US tourists, of course. It will come down to the implementation on a state-by-state basis and the concerns about the trajectory of China's recovery as well. Some very lackluster PMI data. What is the policy response going to be? So the Stoxx Europe 600 gaining just over 0.1%, up 76 points. The UK, of course, closed for a bank holiday yesterday. The FTSE 100 just edging lower. It started off in the green, edging lower, down by about 7 points. The DAX is slightly better territory, up 0.4%. We continue to keep across the political wins in that country. The CAC 40 as well, just about hanging on to those gains. We had some CPI data, PPI, inflation in France are picking up, and the GDP imprint for the second quarter as well, coming in at 1.1%. Let's switch it on then to the sector-by-sector basis, because Anna was pointing out that it's some of those cyclicals, some of the value shares that are taking a bit of a hit today. In terms of energy, you can see that. Of course, travel and leisure on the back of those restrictions voted through by Brussels. The banking sector, bottom of the list, down 0.8%. The yield, lower yields for longer scenario continue to play out. 1.27 is on your US 10-year. In terms of top of the list, you're looking at technology. Again, that push into growth on those lower yields, on those lower rates, and that is still enticing investors. The growth story remains in play. That is where we're at in terms of how things are broken out. Just 30 minutes into the session here in Europe. Let's get the first word news then with Ritika Gupta. Ritika.
Thanks, Tom. More than 1 million homes and businesses are without power in the aftermath of Hurricane Ida and could be for days in the summer heat. The New Orleans area storm defenses built after Hurricane Katrina have prevented flooding, but the electrical grid is down. President Biden vowed to continue providing federal support to Louisiana and Mississippi, but analysts estimate Ida could cost insurers at least $15 billion. 2 deaths have been attributed to the storm so far. The EU has voted to impose fresh non-essential travel restrictions on the United States amid that surge in US COVID cases. The curbs had been lifted in June. Governments of each member state have the final say on accepting proof of vaccination to waive restrictions. Airline stocks dropped in the US in anticipation of the move. And China's economy took a knock from the Delta virus outbreak in August. The official non-manufacturing PMI slumped to 47.5, signaling a contraction for the first time since the initial virus outbreak in the first quarter of the last year. Factory PMI fell to 50.1 from 50.4 in July, slightly lower than the 50.2 median estimate from a Bloomberg survey of economists. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg. Hannah.
Ritika, thank you very much. Ritika Gupta here in London. Back to our top story, and the US has officially ended its military presence in Afghanistan after 20 years. The final flight out of Kabul ends America's longest war, despite pressure on President Biden from allies to delay the withdrawal. US Secretary of State Antony Blinken called it a new beginning.
Now, U.S. military flights have ended, and our troops have departed Afghanistan. A new chapter of America's engagement with Afghanistan has begun. It's one in which we will lead with our diplomacy. The military mission is over. A new diplomatic mission has begun.
The Taliban is calling for good ties, but with the US leaving Afghanistan with a regime similar to the one in charge 20 years ago, we're left asking whether foreign interventions in this case have worked. Malcolm Rifkin, former UK Foreign Secretary and former Defence Secretary, now joins us. So Malcolm, very good to have you with us on this programme. So we heard there Antony Blinken talking about a new chapter, a new beginning. How do you look at the significance of the withdrawal of US troops from Afghanistan some 20 years after they first arrived?
Well, I think it's worth reminding ourselves, despite all the terrible things that have happened over the last couple of weeks, that the initial reason for the intervention, primarily by the United States, but also by the United Kingdom and other NATO forces, was achieved for the last 20 years. The prime purpose, the overriding purpose, was to prevent another 9/11 type attack, either in the United States or elsewhere in the world. Al-Qaeda were effectively destroyed. They have not had that capability, and therefore, to that extent, it's been a great success for the last 2 decades. The challenge, obviously, is to make sure that continues in the years to come.
So, Malcolm, what should the international community's priorities be at this stage?
What we have to await, and it's going to happen in days, not weeks, is the creation of a Taliban government, a proper government, which will then be able to take decisions which it will be able to enforce. There's a lot of speculation at the moment, and it's only speculation, whether the Taliban have changed significantly compared to 20 years ago. Like everybody else, I'm very skeptical about that, but there are some indications that that's what they are intending to do, that they recognize that Afghanistan cannot be governed in the way they tried to govern it 20 years ago. Now, we keep getting stories, correctly so, it's only information available, from various parts of Afghanistan showing some pretty brutal things happening, or the old Taliban methods continuing to be applied. What we don't know is whether that reflects a decision that will be the new Afghanistan, or whether when the new government takes office in the next day or so, whether they will impose a code which will be the same or substantially better than we saw, than the Afghan people saw 20 years ago.
And what kind of conditional engagement do you think we should see, Malcolm, then, between Western powers, Western governments and the Taliban? The Taliban says has said overnight it wants good relations with the United States. What kind of conditional engagement should the West seek here?
Well, the overriding consideration, of course, is the Taliban government's attitude towards terrorist organizations. It's worth bearing in mind that the people responsible for the terrorist outrage a few days ago were an Islamic State organization who themselves see the Taliban as sworn enemies. Al-Qaeda was not involved in that. And therefore, what we need to see, first of all, is will the Taliban government react harshly on Islamic State? They ought to. It's in their own interest to. They have already seen them as sworn enemies. So in that very narrow sense, the Taliban's objectives are the same, not just of the United States or the United Kingdom, but actually of Russia and China as well. So I'm not too despondent about that. I think what is more problematic, although there are only remnants of Al-Qaeda in Afghanistan, Al-Qaeda will hope to rebuild their strength, given that there is now a Taliban government. How will the Taliban government actually deal with that? Will they tolerate it? Will they tolerate it in the way they did in the past? If so, we're in for very bad events. And the United States, I'm glad to say, has said they would already take a decision to return to presumably air strikes on Al-Qaeda if that happened. But that's still to be seen.
As you point out, still a number of unknowns, of course, as to how all of this unfolds. But at this point, with the information that we have on hand, is it your view that we are more or less exposed here in the West?
Well, we are exposed in the sense that everyone is exposed to terrorist organizations. You can never get 100% security, whatever the views of governments, including the Taliban government might be. There will be limits on what can be delivered. But we have seen that Al-Qaeda, at least until today, as we speak, have not been able to get back to the capacity to carry out terrorist outrages of the kind that we saw 20 years ago, 9/11 in particular. All the terrorist outrages that the Al-Qaeda have been responsible for have been carried out by single terrorists using knives or guns or whatever, and nothing of the coordinated kind we've seen in the past. So I don't see there's any reason why the West should reduce its precautions. The United States in particular, but other countries like the United Kingdom have been very effective in preventing that kind of outrage. The Taliban government, if they want cooperation, if they want diplomatic recognition, and if they want international financial collaboration, they must play their part. And that's the leverage we have. We have a Taliban government that's saying it wants to have good relations with the United States and with the wider world. 20 years ago, it couldn't care less. But it recognizes that today, Kabul is a very different...
It does seem remarkable, yes, to just that statement in itself. You've written about NATO in the past, Malcolm, and you spent a lot of time, obviously, at the front line of UK politics from a defence and foreign policy perspective. What do you make of what seems to have been a breakdown in cooperation between Western allies over Afghanistan? Do you read a lot or not very much into this, given as it comes quite early on in the Biden administration?
Yeah, I mean, I hate to say it, but I'm afraid that there was a very serious rift. And I'm not saying it's long-lasting. I think it'll cure very, very quickly. At least I believe it will. And that's not just wishful thinking. But I think what was so sad, and allow me to say as a great friend of the United States, just occasionally the United States doesn't do enough to not just inform, but consult its allies. The operation in Afghanistan was, after all, a NATO operation. Overwhelmingly, it was American, of course. We all recognize that. But there were British and other troops from other countries with soldiers who lost their lives. And so when the decision was being taken to withdraw from Afghanistan, not just the principle, but how it was going to be done, it's quite clear that the US came to a position and simply went forward on that basis, informing its allies eventually, but not genuine consultation and cooperation. And that's not how a proper alliance should operate. I have to say that.
So Malcolm, I want to draw on your experience, your first-hand experience dealing with Chinese officials in the past. Do you expect China to try and take advantage of this situation?
Well, you've got to be careful with how one views the Chinese and Russian position. On the one hand, they are literally delighted that the United States in particular has been humiliated, has had to withdraw from Afghanistan, and of course will have very little influence compared to the past in what happens in that country. And so China and Russia are both trying to fill that vacuum, and to some extent they will, because geographically they're much closer to Afghanistan. It's their neighbor in a pretty real sense. However, and it's always important to recognize the howevers, China and Russia would have liked the United States to win. They will never admit that, but they would have liked it because they wanted the Taliban not to retake power, because, of course, anything that encourages the possibility of Islamic extremists being able to go from Afghanistan into Western China, where the Uyghurs, the Chinese Muslims, are currently being persecuted, or into Russia, where Chechnya and Dagestan are Muslim territories. The Russians are as nervous as the Chinese. So on this issue, the Russians and Chinese will be wanting to have influence on the Taliban, not just to spite the United States, but to impose upon the Taliban a precondition for their support, that they do not give any succor or support either to Al-Qaeda or to Islamic State. So in that sense, China and Russia's objectives with the Taliban are not that different from those of the United States, the United Kingdom, or the international community as a whole.
Okay, so Malcolm Rifkind, great and excellent to get your thoughts on this historic day. Former UK Foreign Secretary and former Defence Secretary. Okay, switching gears. Coming up, moves from Messi and Ronaldo and almost £1 billion spent by the Premier League. It's been a sensational transfer season, but there's still time for some final deals. More on that next. This is Bloomberg.
What do you predict the Taliban will do in the coming months and years?
I would say consolidation of their power and gaining international legitimacy and recognition. This is the priority for the Taliban, not supporting transnational jihad, not basically in any activities outside of Afghanistan. If you really watch carefully what the Taliban have done in the past few days, they are engaged in a public relations offensive. They are trying to convince the world. I mean, if you listen carefully to what they're saying, you think that the Taliban are newly born Democrats. They are peacemakers. And the reason why they want to consolidate their power, they want to convince the world that the Taliban have changed.
The power of Bloomberg.
Let's get the session started and wrap up the trading week.
News.
Who knew that one earnings story could take the entire market? There's upward pressure on wages.
Analysis.
This is really a slow, ongoing implosion.
Context.
Is there veracity to this granular data of ADP?
It's an ugly report.
The power of the Bloomberg terminal. The power of Bloomberg television and radio.
Tesla's the one that we got our eyes on.
Bloomberg has it covered.
Welcome back to the European market open. 46 minutes into our European trading day. And we're running a little volatile here on European equity markets. We seem to have made some gains to the upside just in the last half hour or so. The Xetra DAX certainly leading the way, not the FTSE 100, weighed down by the banking sector, though getting a boost from some of those basic resource names. So the DAX is up by 0.5%, and as a result, the Stoxx 600 up 0.2. Let's get a Bloomberg Business Flash, some of the top corporate stories we're following here today at Bloomberg. Here's Ritika.
Thanks, Anna. Process has agreed to acquire Indian online payment service BillDesk for $4.7 billion, making it the largest global acquisition to date in the Asian nation. India had a record of $6.3 billion of funding and deals for tech startups in the second quarter. Bloomberg's learned that Apple will add at least 2 emergency features that will rely on satellite technology in its future iPhones. We're told they will allow users to send texts reporting major emergencies to first responders and contacts in areas without cellular coverage. However, sources tell us even if Apple's next iPhone has the hardware, the feature is unlikely to be ready before next year. And that is your latest Business Flash. Tom?
Okay, Ritika Gupta, thank you very much. Today is the last day of the summer transfer window across the major European leagues, leaving clubs scrambling to seal some final deals before tonight's deadline, 11 p.m, to buy and sell players. But it's already been an historic football transfer season. Premier League clubs have spent almost £1 billion so far. But the main attraction has been the moves from the world's 2 biggest stars, Lionel Messi and Cristiano Ronaldo. Let's get more then from Bloomberg's Joe Easton. Joe, Messi and Ronaldo dominating the conversation, of course. How big a financial impact do these star players have?
Yeah, they do have a really big impact in terms of attracting sponsorships is the main thing in terms of their marketing power, but it also needs to translate onto results on the pitch. And we have seen with Juventus, they had this big commercial boost from getting Ronaldo back in 2018. We did see their revenue rise quite a lot. That was mainly through sponsorship pacts with companies like Allianz and also Jeep, so they did quite well there. But they weren't able to really succeed on the Champions League stage. And as such, the kind of share price impact and the overall commercial impact didn't last too long. But we will likely see some revenue impacts at Man United if they can get the sponsorship deals up. But as I mentioned, we really need to see the results on the pitch as well.
OK, so it's what happens on the pitch that really matters. Clubs are trying to repair their finances, then we know, Joe, after the tough times around COVID, where they played so many times to empty stadiums with or without the piped-in crowd noise. What role did transfers play then in trying to rebuild those finances?
Well, so we saw a lot of the smaller clubs were really hit really badly from the loss of ticket sales, whereas the larger clubs were kind of able to weather that. And we've even seen, even with Man United, they had a really big hit on their ticket sales of as much as around £30 million in one season. But they've now gone and spent almost 110 million on just two players with Varane and Sancho. So clearly it hasn't been the huge hit for the bigger clubs. Clubs like Chelsea, Man United, PSG, they've obviously got these really deep pockets with big backers, so it hasn't been so much of an issue. But we have definitely seen fewer transfers in the lower levels of the leagues. The smaller clubs have been hit much harder because they're so much more reliant on the ticket sales. They don't get that Champions League money and the big broadcasting deals. So it's really been a case, once again, of the richer clubs kind of pushing on and the smaller clubs having to cut back.
Joe, thanks very much. Bloomberg's Joe Easton with the latest on football transfers. Coming up on this programme, we'll be back to the markets. Treasury yields are holding on to gains made after Jerome Powell's comments at Jackson Hole, but with yields still below their 2021 peak, will they ever make it back up again? We discuss that and more with our Markets Live strategist, Ven Ram, who joins us next. This is Bloomberg.
I think what we're seeing during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
Trading revenues coming in better than expected. Everything cash, $1.4 trillion of cash. One of the most notable aspects of this report that was stellar.
Welcome back to the European market open, 8:52 in London. So 52 minutes into a session that's a little negative for London, but elsewhere making modest gains, certainly over in Germany. Let's talk to Ven Ram from our Markets Live team, who's with us to talk about these markets. And Ven, we're just about holding on to the levels of Treasury yields that we saw in the wake of Jerome Powell. We do see a bit of downward moving in yields this morning, but where do you see yields heading? Now we know what we know from Jerome Powell. Where does that leave us for 2021?
Morning, Anna. I think that, Treasury 10-year rates are kind of headed lower, definitely. And I think that if you ask for a specific level, I would say around 109 is where it's indicated on my model. Now, why do I say that? Look, if you look at the terminal rate, which is kind of presaged what traditionally the 10-year yield does, it's now trading around, it's now quoted around 145 basis points or thereabouts. So, in other words, the market is saying that, look, whatever the Fed does between now and the time it's done with taper and rate hikes, we are not going to go too much beyond 150 on the key benchmark rate. That means that there is no particular incentive to sell treasuries, particularly the long-dated variety. And so I do think that, we are not going to go higher on yields anytime soon. Definitely, this year's high of 178 looks very far from where we are at the moment.
Yeah, the 178 looking very, very high from where we are. 150 topping the levels maybe in terms of your view. To what extent then is that keeping a cap on levels for the dollar? We're seeing the dollar index off about 0.2%. You're seeing euro dollar about 118 today. What is the outlook for the greenback then?
Well, I think that the greenback is selling off slightly because, we have seen the 5-year real rate in the U.S. take a sharp plunge after the Jackson Hole address. And that is quite the move in the 5-year real rate is much bigger than anyone foresaw. So I do think that, the dollar has to trade in sympathy with what the real yields are doing. It can't trade out of whack. It is slightly stronger than what the 5-year real yield would indicate. So I do think that, as I mentioned in one of my notes earlier, I do think that the dollar is going to tread water from here, albeit I don't think we are going to see the lows that we saw last year.
I just want to quickly mention, Ven, the data we're getting out of Germany on unemployment. The August unemployment rate, falling to 5.5%, not far from the estimate of 5.6, but it is below that. The seasonal adjusted unemployment numbers falling 53,000. That's a bit better than anticipated. The estimate was for a drop of 40,000. Just briefly, though, I love the title of your piece. We have a flight to nonsense. What is the nonsense that we're all flying into then, Ven?
I think the idea of that column was that, given the ultra loose Fed policy settings that we have got at the moment, we see just about everything with a price tag to it being bid up indiscriminately. So if you look at Greek bonds, for instance, the front end of the Greek yield curve is trading at negative yields. Now, this was a nation that was teetering on the brink just a few years ago in terms of a debt crisis and all that. So even those bonds are trading at negative yields. And if you see the U.S. stocks, they are posting a record every single day. And if you look at the junk bond index, corporate junk bond index in the U.S., that's trading at an all-time high. So what is the one common factor behind all this? It's the ultra-loose policy settings that we have got.
Ven Ram from our Markets Live team, thank you very much indeed. That is it for European Market Open. Surveillance is up next. Stay with us. This is Bloomberg.
People ask me all the time, what is the key to being a really good investor? And I tell them it's to surround yourself with and work with the best investors you can find. On Bloomberg Wealth, I'm going to take you to meet the greatest investors in the world, the people that I would like to have managing my money.
You know, you pursue a career in what you're naturally passionate about, and that will improve your odds of achieving success.
I'm here to announce the completion of our withdrawal from Afghanistan and the end of the military mission to evacuate American citizens.
A new chapter of America's engagement with Afghanistan has begun. It's one in which we will lead with our diplomacy.
There is an enormous amount of international leverage that we will continue to work in a coordinated way with our partners around the world.
The military mission is over. A new diplomatic mission has begun.
This is Bloomberg Surveillance, Early Edition with Francine Lacqua.
Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition on this Tuesday, the 31st of August. I'm Francine Lacqua here in London, and here's what's coming up on today's program. The U.S. ends its 20-year military presence in Afghanistan with its final flight out of Kabul early this morning, bringing a close to the country's longest war. China's recovery slows, services slide, and back-to-back months for the first time since February 2020. Beijing widens its crackdown to private equity firms. And EU travel curbs. The bloc recommends new restrictions on U.S. travelers in another blow to the tourism industry, but will individual nations choose to enforce them? So let's get straight to our top story this Tuesday. The U.S. has officially ended its military presence in Afghanistan. The final flight out of Kabul ends America's longest war, despite pressure on President Biden from allies to delay the pullout. Well, here's what U.S. Secretary of State Antony Blinken said.
Now, U.S. military flights have ended, and our troops have departed Afghanistan. A new chapter of America's engagement with Afghanistan has begun. It's one in which we will lead with our diplomacy. The military mission is over. A new diplomatic mission has begun.
Well, let's bring in Bloomberg opinion columnist Bobby Ghosh, who's had some fantastic piece explaining the real intricacies of what's going on in Afghanistan. Bobby, thank you for joining us today. We say after 20 years, the war, that the U.S. is no longer involved in this war. Can it really stay away, given what we could see come out of Afghanistan?
No, I don't think it can. I think the U.S., one phase of the U.S. war in Afghanistan is over, but the larger war on terror, of which Afghanistan was a very large part, continues. And we've heard from administration officials in the United States that they intend to continue to fight that war in Afghanistan, but do it from a safe distance. We keep hearing the expression over the horizon. And that's a very difficult war to conduct, as we've already experienced a drone strike that was meant to be against an ISIS target. It looks like might have killed a large number of Afghan civilians. We've seen that happen before, and I fear we'll see a lot more of that happen going forward. When you try to fight a war without actual reliable eyes on the ground, when you try to fight it from over the horizon, the scope for mistakes is much, much greater. And each of these mistakes then provides fuel for your enemies.
Bobby, I've heard everything over the last 2 weeks that actually the Taliban want international acceptance, that they don't care about international acceptance, that they don't need the money, that they do need the money, that actually they'll be more moderate, and they won't be. When do we find out what exactly the Taliban are?
Well, we don't find out until they choose for us to find out. I think we look at what they've done in their past. We look at what they've done very recently. Remember, large parts of Afghanistan remained under their control, have been under their control for the last several years. So there is a history that we can look at if we want clues to what they will behave like going forward. Yes, they say they want international recognition, but they want it on their own terms. It's not clear what they're willing to give up from their very maximalist demands in order to get that international recognition. And then once they've got it, if they get it, whether they'll stick to their side of the bargain. The history does not give much room for optimism. They have made commitments and they have failed to keep up those commitments over and over in the past.
It's also unclear to me whether ISIS-K are sworn enemies of the Taliban or actually whether they can work together to fight the U.S.
Well, they are and they're not. I mean, the U.S. is taking the view that our enemy's enemy is somebody we can do business with. But if that is true, if that logic holds true, then the Taliban and ISIS may equally feel the same thing about the United States. The fact is that, yes, at the leadership level, it looks like for the moment that ISIS and the Taliban are enemies. But you have to remember that at mid-level commander level, at the level of foot soldiers, these are people who are recruited from the same pool of, in fact, quite a lot of ISIS fighters came from the Taliban. They are brothers in arms. They are actually, in many cases, literally brothers, people from the same family. So it's not quite so clear that they are enemies, and if they are enemies, that this enmity will remain forever. The Taliban, again, in the past, once they acquired power in Kabul, have shown themselves capable of making deals with people that previously were regarded as enemies. I wouldn't rule them out doing the same thing. And by the way, in all of this conversation, what about Al-Qaeda? You know, Al-Qaeda is still very much there. We've seen videos of Al-Qaeda leaders returning to Afghanistan, being received with ceremony by the Taliban leadership. We shouldn't forget that.
We absolutely shouldn't. Bobby, thank you so much for all of your insight. Bloomberg opinion columnist Bobby Ghosh. Now, let's turn to Europe, and EU countries have also voted to impose fresh restrictions on non-essential travel from the U.S. amid a surge in coronavirus cases. The curbs had been lifted in June, with the reintroduction most likely to affect unvaccinated Americans. Well, joining us now is Bloomberg's Ben Sill, who leads our European government coverage. Ben, so great to see you in London. So what exactly are the new EU travel rules?
So what we got yesterday was a recommendation from the EU to reimpose restrictions on people arriving from the US. It's now up to the member states to decide how they want to actually interpret that. They're under a degree of pressure, though. They have kind of signed up to the framework under which these recommendations were adjusted yesterday, and they also are trying to move together so that the Schengen travel area, the free travel within the EU, is able to be protected, and they don't end up with a patchwork of different regulations in different countries.
So I don't know when all of this comes into force. We have to wait for individual countries to decide exactly what they want to do, Ben. But what does it mean for a U.S. resident who wants to travel to the EU?
Yeah, there's no particular timeline. Actually, we're waiting for the individual countries to let us know what they plan. For Italy, for example, sounds like they're not planning to do a dramatic increase. I think there are two particular things to watch. One is quarantines. What this recommendation does is open the door to imposing quarantine on people arriving in the US, which I think is the key issue, which would really deter travellers. And the other thing is vaccinated people. Member states have the right to waive the restrictions for people who've been fully vaccinated, and I think certainly in the tourist countries around the Med, that's something that they're likely to cling on to.
Ben, thank you so much. Ben Sills there with the very latest, of course, on this EU travel. Now, up next, China delivers a PMI shocker, adding to concern over the health of the global recovery. We discuss that and much more with Saxo Bank's Steen Jacobsen. This is Bloomberg.
Are you still committed to the U.S. pickup market? You mentioned how small it is, and I know you do good business at the frontier, but a lot of times Americans want something bigger like the Titan. Is that, do you plan to stay in that market as competitive as it is?
I mean, for us, market is one thing. The second is
what customer aspires for from Nissan. And customer in United States aspire for sedans, SUVs, and the pickups. And Titan is a great pickup truck, and we are, of course, focusing on the Titan. But as I said before, that in our whole lineup, our main focus is always been in the sedans and SUVs and the smaller pickup truck.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now let's get straight to the markets with Ritika Gupta. Ritika, another record for U.S. indices yesterday. What does it look like today?
Yeah, Francine, it's just like another day, another record high, and we continue on those gains. It's like there's no deterring this market. We sit now above that 4,500 level. Of course, this is the end of the month. It could be a bit choppy as we see some rebalancing here, but it really is tech outperforming. The NASDAQ 100 also reaching another record high. This as we see the likes of Apple reaching another record high yesterday, $2.5 trillion market cap. So that really giving a boost to the indices. We know Apple and Microsoft making up about 12% of the S&P 500 alone. A lot of this could come from the yield story. We see that 10-year about 1.27%. So we know your lower yields are good for tech with that lower discount rate kicking in. And I also want to talk about some metals here. Aluminum, the highest prices in 10 years. We're seeing supply constraints as demand really intensifies for that metal. So we see the likes of Goldman Sachs upping their price targets on the like of aluminum and nickel, Francine.
Ritika, a lot of optimism out there. Still reasons to be bearish when you look at those China PMIs data in general.
Yes, certainly, Francine. We do have reasons to be bearish, and one of those is that Chinese data, that PMI. We're starting to see the Delta variant again start to show up in the data. So the manufacturing PMIs slowing to 50.1 from 50.4 in July, but it was really the services PMIs that stood out here. Those contracting for the first time, going all the way back to February of last year. So a contraction here, and the question is whether this is just going to be a short-term snag or it's going to be somewhat of a sustained slowdown here. But it does give policymakers some more room. There are chatter about an ease in those reserves for some lenders and also more fiscal spending from the government in the second half of the year, Francine.
Ritika, thanks so much. Ritika Gupta there with some of what you need to watch in the markets today. Now, joining us now is Steen Jacobsen. He's Chief Investment Officer at Saxo Bank. Steen, I mean, there is so much optimism out there. I feel like every day we talk about a new record on Wall Street. What would make it correct it?
Inflation, and reflation is everywhere to see. Electricity prices in Europe reaching all-time highs, gas prices all-time high, aluminium prices, as you just stated, all-time high, CO2 emission all-time high. But the narrative in the market is that they want to believe what the Federal Reserve and other central banks are saying, that this may not be transitory, but it's certainly temporary. So in that respect, the market continues to see only the upside here.
But, Steen, do you think this inflation is temporary? I mean, we had a speech by Jay Powell that basically said, yes, they're ready to taper. A taper does not mean they'll hike. What does it mean for your portfolio construction?
It's absolutely not temporary. It's an elevated level. And I think, what is driving the market overall, both from a policy perspective in the ability to afford all of these fiscal expansion that we see and the green, we need negative real rates. But in terms of how you get negative real rates, you can have them two ways. You can have a relatively low growth with a slightly high inflation, or as I expect it to be, a very high level of inflation, something like 4 to 5% overall, that then needs to be met by a higher significant interest rate to mitigate that. So I think right now the Federal Reserve is doing a big policy mistake in the sense that they, like everybody else, have no experience in actually managing an inflationary environment. And if we look at the just on the equity side as well, Francine, we can now see that green transformation and commodities again starting to restart the engine and moving significantly higher. And to me, that means that reflation trade is just around the corner as we come out of this summer, and of course, as we deal with the different strains of the COVID.
Steen, but if you're expecting a protracted inflation, is there a danger that actually we have a policy mistake, or is there a danger that we see a rate hike, maybe from the Fed, pushed after small open economies have to raise rates because of the very nature of what they're dealing with the markets not being telegraphed?
Absolutely, and I think you're pointing to something which is really important. We have an asynchronic central bank policy around the world right now. We have a number of central banks either already started in the case of a lot of the emerging markets. We have some of the small open economies, as you state, that is very, very willing and able to move. And then you have the U.S., who very much sits in a corner and don't want to do anything because they still have this dogmatic view that full employment needs to be in place. But you have to remember that the labor market in the U.S. and the overall economy in the U.S. is already reacting and creating numbers in terms of inflation on job seekers and the likes, which is equivalent to a full employment. That full employment is then, in a net delta change, is really coming from the fiscal boost, which continue to come in and which we expect will also come throughout the early parts of next year.
Steen, very quickly, what do you do with gold?
I'm long gold. I remain of the opinion that you need gold in the portfolio. It's a tail risk, but overall, you really need to be long volatility.
Long volatility into the winter or a little bit before? I also don't know exactly how you look at China, because every day there seems to be a crackdown. I don't know whether at some point we could see a policy mistake from China or too much crackdown that also takes the world economy down.
The Chinese authorities is in the political season. You have to remember by July next year, they have to have all of the appointments in place in order for the coming session of the Congress to re-elect President Xi. I think very much what's going on in China right now is a political game underneath what looks like a classic clampdown on the sort of the technology businesses and trying to replace this. So in the world right now, as you mentioned, we have two assets that is really worth being long. One is the green transformation and the government-sanctioned assets in China and in the world. And on the opposite side of that sits markets and equities which have price discovery, which is really the mining sector and resources sector. So it's kind of ironic. You have to be both very long the government-sanctioned policy, and then you have to be going back to a good old market-based price discovery assets as well. Those two things remain, in my opinion, relatively cheap relative to expected policy changes. The rest of the market is extremely, extremely expensive.
Steen, thank you so much, as always. Steen Jacobsen, their Chief Investment Officer at Saxo Bank. Now, coming up, markets are continuing to embrace the Fed's dovish taper tilt, and traders are awaiting key U.S. jobs Friday for further guidance on the economy's strength. We discuss that next. This is Bloomberg.
Neptune was discovered, everyone wanted to do it because it was this clear demonstration that you can use math to discover objects.
Unfortunately, since then, no major planet in our solar system has been found. But thanks to modern telescopes, thousands of smaller objects have been discovered in the past few decades beyond Neptune, called trans-Neptunian objects, or TNOs. And planetary scientists at the California Institute of Technology have noticed some anomalies with these objects. Their hypothesis? A giant theoretical planet beyond Neptune, Planet 9. And thanks to a new telescope, equipped with the largest digital camera ever built, we may be one sky survey away from finally finding it.
Global markets never sleep, so stay connected with Francine Lacqua in London, Matt Miller in Berlin, and Kaylee Lyons in New York. Perspective on the day ahead. Bloomberg Surveillance, early edition. Weekday mornings on Bloomberg Television.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now it's Tuesday, and if you look at the market, so we had another record high over in the U.S. U.S. futures, again, climbing today, buoyed by another record we saw yesterday. It's been guided by supportive Fed policy and rebound in corporate earnings. Of course, here in Europe, we're pausing a little bit for breath because of some disappointing data out of China. Now let's get straight to the Bloomberg First Word News. Here's Leanne Garrett. Hi, Leanne.
Hi, Francine. The Taliban have called for good relations with the U.S. hours after the final American soldiers flew out of Afghanistan to end 20 years of war. Taliban leaders walked across the tarmac of the international airport in Kabul. It was the last place under U.S. control. Now, New Orleans has managed to escape the floods from Hurricane Ida, but it now faces days or weeks without power. And it's not just New Orleans. By Monday evening, more than 2 million people across the region still lacked electricity. Meanwhile, the system of floodgates and pumps installed after Hurricane Katrina devastated the city in 2005 passed their biggest test. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Francine.
Leanne, thank you so much. Now, after Jackson Hole last week, where Powell reiterated inflation is transitory and signaled tapering could begin before the end of the year. In an earlier interview, Rajan warned that the greater danger for the global economy is the Fed tightening too slowly, while investors will be looking ahead to Friday's jobs data for further clues about the strength of the U.S. economy. That's as the Delta variant continues to cloud global outlooks.
But there's one big difference post-pandemic, which is the enormous amount of fiscal spending. That wasn't there. My worry is if they don't fully account for these new forces, they may be behind the curve.
Well, joining us now is Steen Jacobsen. He's chief financial or chief investment officer, actually, at Saxo Bank. Steen, thank you so much for sticking around. We were talking about some of the policy mistakes and actually what we could see in terms of inflation. Where would the Fed's pressure come from to actually tighten? Inflation? Is it jobs? So how important is just jobs report? Or is that actually also, you know, the Bank of England, like we saw the Bank of Korea, tightening before the Fed?
Very much the non-farm payroll number. It seems like that the Federal Reserve is data point by data point in terms of initiating the actual tapering. But I think what the market will ultimately focus on is the speed at which we're going to reduce this tapering. So you have an economy which is being, constantly given liquidity provision from the Federal Reserve, but all of a sudden it will be done and gone by the mid-year next year. And I think that the speed of the tapering is far more important, whether we start in October, November. But, my fixed income analysts, they expect if we do see a strong number, slightly better than expected or expected, then we will probably see an announcement already for October. But I think the market consensus is November.
So, Steen, I know you like gold. Is there anything else that you would be buying into right now? I know you like, I think you'd be buying VIX.
I'm buying the VIX, the midterm VIX, not the front VIX, which have too much decay for portfolio construction. So at all times, I want to have 5% in volatility in sort of the mid-size of the curve. And overall, I think, Francine, as we talked about briefly before, I think what is going on right now is that we are moving into reflation. You have to remember all of this infrastructure and green transformation talk that's been done so far has come without actually implementation. There's been very little permission in terms of expanding electricity grids, in terms of what goes on. So for me, I think this is the second wave in green transformation. I think we are sort of starting up the engine to start a very, very forceful enactment of moving from what is essentially both on ESG and on green talk to something that is actionable in terms of investment and moving. So I will expect the coming budgets at a bare minimum to start the conversation about spending into these regions. And I think that will increase the pressure on the reflation trade as seen by the green and to some extent by the commodity side.
Steen, thank you so much. Steen Jacobsen, their Chief Investment Officer at Saxo Bank, joining us today. Now, coming up, China broadens its crackdown to what it calls fake private equity firms at a time when the industry globally is booming. We speak next to Nikos Statopoulos from BC Partners. This is Bloomberg.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
In crypto, you have a world of young people that want their own financial system and their own culture. And it is very powerful, and I'm a big believer in it.
Every Friday with 30 minutes dedicated to fixed income, I'm Jonathan Ferro. This is Bloomberg Real Yield.
The U.S. ends its 20-year military presence in Afghanistan with its final flight out of Kabul early this morning, bringing a close to the country's longest war. China's recovery slows. Services slide in back-to-back months for the first time since February 2020. Beijing widens its crackdown to private equity firms. And EU travel curbs while the bloc recommends new restrictions on U.S. travelers in another blow to the tourism industry. But will individual nations choose to enforce them? Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, China has found its next target in its wide-ranging crackdown. That's private equity. Its securities regulator says it plans to rein in the sector, focusing especially on what it calls fake PE funds that are sold to the general public instead of targeting investors. Now, earlier this month, Beijing already halted private funds from raising money to invest in residential property developments. Well, joining us now is Bloomberg's chief Asia economics correspondent, Enda Curran. So, Enda, exactly what does this mean, and what does it mean for who?
Well, it's the latest crackdown on the finance industry, Francine. We're still trying to nut out the details of it, but the basic gist of it is, as you mentioned, they're talking about banning what they term to be private equity funds that are being targeted at the general public rather than going to those specialist investors. There's also language around targeting these funds that are embezzling funds, for example. And the regulator in the speech made it clear that private equity should be all about promoting startups and innovation rather than going down the path that it has. Now, the private equity scene in China is pretty much dominated by Chinese houses. There isn't that much. There is some foreign investment in there, but it's pretty much dominated by Chinese names. So it's hard to know how this will spill over exactly. But you would have to just look at it in the broader picture. And the broader picture is this ongoing regulatory crackdown on so many sectors now, including finance. And that's why we're seeing private equity get caught up in that dragnet.
And who else? I know yesterday we were talking about, for example, medical expenses, possible house prices. I mean, what is there left for China to crack down on?
Well, certainly the language is getting more aggressive, and there's a sense of urgency now in these comments and speeches that we do get from Chinese regulators or from meetings, Francine, that they are now really pushing through a pretty broad policy agenda. And it stretches all the way from, you know, as you mentioned at the start, this idea of pushing a more equal society, a more equal economy that's under the banner of common prosperity, right down through individual industries, right down to micro measures like the new ban on video gaming for children and teenagers, for example. So it's a pretty sweeping agenda that they have. And I think the question a lot of people are asking as they try to digest what it means is, can China pull off this big regulatory overhaul and keep the economy broadly on track and continue to attract foreign money at the same time? I think that's the big question that investors are asking. That's what everyone's going to be looking out for in the months ahead.
Enda, thank you so much. Our Bloomberg chief Asia economics correspondent, Enda Curran. Now, China's private equity crackdown comes as the industry globally is booming. PE firms are raising funds at the fastest pace ever as investors seek out alternative ways to make returns. Joining us now is Nikos Statopoulos. He is managing partner at private equity firm BC Partners, a staple of the firm since 2005. He has more than 23 years experience in the industry. So, Nikos, thank you so much, as always, for making time to speak to us. How has the private equity world actually changed in the last 23 years, and what's accelerated since the pandemic?
Good morning, Francine. I think it's certainly the industry has changed a lot in the last 23 years. I think it has more than tripled, frankly. The industry now is about a $4 trillion industry, where even in the last decade alone, you've seen the number of private equity firms really doubling. And this is not by accident. I think it's because our industry has a lot of structural advantages that cater for this. First of all, it's a lot of active ownership. We are active owners, we can affect change, we can influence outcomes, but also it's more patient capital, it's more long-term capital, and therefore that means we're not impacted by cycles, we don't need to do quarterly reporting, And it has grown substantially, so it has been able to evolve over the last 23 or 25 or 30 years that has been active.
But Nikos, I mean, I was looking at some of the figures, are absolutely incredible. Where do you see us in this M&A cycle? So I think more than $2.5 trillion were actually spent. Is that going to grow on M&A, or at some point does it actually breathe?
We think we've seen the volume of transactions actually increasing. I mean, 2020 was a relatively lower volume of deals because of the pandemic, but this has picked up substantially in 2021. And yes, there's a lot of dry powder in the industry at the moment, as you said, about $2 trillion or so, but also the volume is higher. So our industry has shown that roughly every single year, there's about 2 to 3 years of deployment of dry powder that is out there. And I cannot see stopping. I was a bit surprised actually about the earlier comment of the crackdown in China and in an industry that has been growing and also supporting the economies across the world.
Does it mean that it's more difficult for you to do business in China?
It might be. I mean, our firm has not been doing business in China. We have a lot of investors, of course, from Asia and from China itself. But we have not been investing so much in China. It has been a lot of local private equity firms operating over there. But as I mentioned, the industry has been growing so fast that I think you've seen that phenomenon happening across the world.
Nikos, if you look at fundraising, I mean, some of the numbers, again, are absolutely staggering despite despite the pandemic, which means that you probably have less, person-to-person meetings with fundraising scopes, but actually the money's still coming in. Again, is there a limit to that, or do you just continue seeing people wanting to be invested in private equity, maybe because of central banks?
We've seen the volume of investors coming into this asset class actually increasing. We've seen the number of funds, as I was mentioning, increasing. And this is because really the industry has shown consistently superior returns to other asset classes. And therefore, with so much liquidity out there in the market, people are willing to invest more in this asset class. I mean, private equity has proven to outperform effectively every other asset class. And it's not surprising that you see that growth. So I do not see that stopping, frankly. I think there's a long runway still for this asset class as long as we continue to perform and deliver these returns.
Has deal scouting and deal making changed because of the pandemic?
It has a bit because we, as you correctly said, we have to adjust as well. We cannot have, or we couldn't. Now I think things are changing. Have these in-person meetings, so we cannot win the hearts and minds of the founders and the families and the management teams via Zoom. But I think this has not stopped really the deployment of capital. And now with markets opening up, with the vaccines, with life coming back a bit more to normal, we've seen this going back to the previous levels that we had back in 2019. So yes, we had to adjust ourselves. But frankly, I think we're back to normal, it seems.
Nikos, through a lot of our research, we basically found out that BC Partners was holding on to some of their portfolio companies maybe for a little longer instead of IPOing them. Is there a reason behind that? Like, what's the rationale?
Well, one of the downsides of the private equity model is actually the fact that, we have closed-end funds. So it means that at some point we need to sell what we invest in. And our industry, by being very creative, by being innovative, by evolving all the time, has figured out ways to hold on to certain assets where they feel there's still a lot of runway, there's still a lot of growth. And one way to do this is through holding them on a bit longer, either through buying them through a new fund or through what they call now continuation funds or single asset funds or other ways that you can continue having exposure to basically your big winners where you think there's still a sustainable growth prospect. So yes, I think you will see us being a bit more creative as an industry because we need to evolve to address some sort of the downsides of the business model.
Are you worried about a market correction?
I'm worried that inflation is going to creep up, and of course this can have an impact. I'm worried that maybe interest rates might also slightly increase, and this could also have a negative impact, of course, on the financing, on the cost of financing, which is important in what we do. but I'm not really worried that much that we will have a substantial crash or a big correction. I mean, valuations, unfortunately, as a buyer, still remain very high. So it has made really our job of investing really more difficult over the years because you need to have that more conviction. You need to find that growth. But I'm not that worried about a substantial market correction at this stage.
Nikos, where do you find that growth, actually? If you look at the UK, it has relatively low multiples. Does it mean that you could go bargain hunting in the UK?
The UK has been one of the markets. We're not so much focused on geographies. We're looking at assets and we're looking at sectors. So, we've been trying to be very disciplined on the asset selection. And I think ultimately our job is to invest steadily through the cycle to identify these quality companies that have some long-term trends in the industries they operate. So we've been more focusing on sectors. And within these sectors, really sectors like healthcare, for example, or telecoms and media and technology or software, sectors where you've seen some recurring revenues, strong cash generation, subscription-based businesses where you can predict a bit more, have been industries where we have been focusing on, or industries where they've been disrupted through this pandemic, and we're taking advantage of this disruption by trying to identify some opportunities. I think the UK may, on the face of it, sometimes feel a bit lower valuation. Ultimately, the risk reward is not just an absolute measure. The absolute valuation is not necessarily determining whether it's going to be a good investment. We need to look at the growth. The UK has gone through a slower pace. We do see opportunities in the UK. You see currently the battle for Morrison's, for example, in the supermarket space. I think this, depending on certain sectors, you will see more activity, I believe, in this country.
But do you believe, in general, listed companies just look a little bit expensive?
I believe they do. I believe they have been also in the last, frankly, 2-3 years. We could be having exactly the same conversation 2-3 years ago, and I would have probably made the same statement. So yes, they do feel a bit expensive. But ultimately, if they continue to grow and if the earnings of these businesses continue to grow, then probably they can justify these valuations.
Nikos, thank you so much for your time, as always. Nikos Statopoulos, their managing partner at private equity firm BC Partners. Now, coming up, Merkel's CDU holds its economy day as their candidate struggles in the polls. We'll have a full roundup ahead of the German elections on September 26th. That's coming up next, and this is Bloomberg.
The July jobs report was strong.
This is an across-the-board favorable report.
More money, more hours, and more people working.
Wages up.
We're seeing our economy moving forward.
Unemployment down.
The unemployment rate declines by 0.5%.
But will Delta hit the brakes on the momentum?
We could still see the consumer become a little bit more skittish.
A lot of kind of negative surprises focused really on the Delta variant.
Tune in for the August jobs report, Friday on Bloomberg Television and Radio.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, there's just a little bit of breaking news from Evergrande. This is, of course, one of the stories that we've been following very closely from the very beginning through its trials and tribulations. Evergrande now saying it has a risk of defaults on some of the borrowings. Now, the total borrowings we found out earlier today of 571 billion yuan versus 716 at the end of December. So they have been getting rid of some of these total borrowings, but again, the latest headline saying that they're still at risk of defaults on borrowings. Now, let's get straight to your Bloomberg Business Flash. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. Prosus has agreed to acquire Indian online payment service BillDesk for $4.7 billion, making its largest global acquisition to date in the Asian nation. India had a record of $6.3 billion of funding and deals for tech startups in the second quarter. Now, Zoom tumbled in late trade after its sales forecast fell short of some analyst estimates. That's raising concerns the company will struggle to maintain rapid revenue growth as workers in schools turn away from remote meetings. The California-based company says revenue will be just over $1 billion in the current period and $4 billion in the fiscal year. And that's your Bloomberg Business Flash. Francine.
Thank you so much, Leanne. Now, the top brass of Merkel's conservative bloc is holding their annual economic summit alongside some of Germany's key business leaders in Berlin today. The economy is traditionally a strong suit for the CDU, and this is an opportunity to put those credentials on display as they slide in the polls. Our Europe reporter, Maria Tadeo, is on the ground in Berlin with all of the details. Maria, so is Merkel's conservative bloc now able to convince 25 days from the election German voters with their credential on economic policies?
Well, Francine, that is what they're clinging onto. It's the economic credentials. The CDU says we have a proven track record. We are the party that works for the German middle class. We are the party that will support the German industry. The problem that they have going into this election, of course, is that they're running up against the finance minister, Olaf Scholz, who in many ways has taken credentials, has taken the credit for overseeing the German economy during the coronavirus crisis. He was also in charge of the furlough scheme, which worked very well for Germany. And he was also the man, if you remember, who went to the flooding sites just a few weeks ago and said, we are going to spend no matter what it takes to rebuild the areas affected. At the same time, Armin Laschet was caught giggling, joking, laughing around on that flooding site, and that is something that continues to haunt him. So it's a very difficult rival to run up against on the economy, because to some extent it's Olaf Scholz that embodies that economic management of Germany.
So, Maria, if we end up seeing a CDU-led coalition, what will that mean for German fiscal policy?
Well, Francine, what they say is that this is going to be your traditional center-right agenda for Germany, economic orthodoxy. When you look at the fiscal side, reducing the debt deficit, they insist the debt break, which is something that is very emblematic of the CDU, will still feature highly on the agenda, and they don't want to take in new debt, new borrowing. The problem with that, of course, is that if you don't want to increase taxes like they say they won't do, you want to modernize the economy and invest, and you don't take new debt, well, that means that your only card is to be able to grow the economy very fast to make up for that gap. The other issue, and this is where it gets interesting too, on the polling, they say we don't want to take new debt because this would be bad for the future German generations. The problem is, Francine, when you look at polls, the young Germans actually say they are okay with spending if that means modernizing the economy and going greener.
Yeah, I mean, we were talking about this yesterday, Maria. I mean, the problem really is that if you're a voter, you just don't see Armin Laschet as a successor of Angela Merkel. You're seeing Olaf Scholz. So he has 25 days to try and turn that round.
Yes, and Francine, you make a very good point, because that is exactly what the SPD is doing. They don't focus so much on the SPD. They focus on Olaf Scholz, his persona, his credentials, and this idea that if you are looking for continuation when it comes to Angela Merkel, which many Germans still continue to support, and she has a very high approval rate, and it's Olaf Scholz that embodies that. This is someone who's already been in government, as someone who's in the sitting coalition and has a huge experience as a politician, not just on the federal level, but also in the roles that he served previously, especially in Hamburg.
Maria, thanks so much. Great reporting there from our Maria Tadeo on the ground. Now, coming up, more than 1 million homes and businesses remain without power in the aftermath of Hurricane Ida. We'll get the latest next. This is Bloomberg. After 16 years in power, actually, remains one of the most popular, if not the most popular, German politician ever. Who's the right person to fill those shoes?
Well, whoever is going to be filling those shoes is going to have a very hard time. Look, as the Merkel era ends, most of the certainties which we Germans, during 16 years of Merkel, tended to take as forever are evaporating before our eyes. The eternal assurance of the United States always protecting us, that's gone out with Donald Trump. The certainty that we will build an ever closer union, the EU, has gone out of the window with Brexit.
Lots happening on Wall Street.
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
I support the new framework.
We need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, Hurricane Ida has caused catastrophic damage. 2 people have died as the storm continues to devastate the U.S. Gulf Coast. An estimated 200,000 people could face weeks without power. Investors are weighing the impact of the storm's damage to rigs and refineries on the oil market. Now, ahead of the OPEC Plus meeting tomorrow, oil is heading for its biggest monthly loss this year. The cartel is expected to restore more output. Well, joining us now is Bloomberg's executive editor for energy and commodities, Will Kennedy. Well, first of all, I guess it's not as bad as it could have been.
No, that appears to be right. As we can see now, the levee system around the city in New Orleans has held, and there hasn't been widespread flooding inside the city. So it's not a repeat of Katrina. But as you say, the biggest immediate impact does seem to be on the power system, which has had a catastrophic failure, and people are going to be without power for many thousands of people. It seems they're going to be without power for some weeks to come. But yes, in the round, it could have been a lot worse.
So, Will, what does it exactly mean for the price of oil? I mean, there's gasoline and the price of oil. Gasoline is going up, but oil, it's unclear exactly what it does because it's also impacted by OPEC Plus.
That's right. So if we look at the hurricane first, Ida, on oil, those platforms in the Gulf of Mexico which had closed, curtailing U.S. production quite significantly, have started to reopen already as the storm moves inland. So we can see that there's not likely to be a long-term impact on oil production, hence there's no big impact on oil prices this morning. On gasoline, on the other hand, we don't know how big the impact is going to be on the very big oil refineries on the Louisiana coast. There's disruption to the distribution network. So at the pump, American drivers are probably going to feel the impact for a little bit. They're going into this coming holiday weekend with the highest prices since 2014. So there will be a bit of impact on gasoline, but the impact on oil is wearing. When it comes to OPEC, we have an OPEC meeting tomorrow. I think it's going to likely to be slightly straightforward. They're expected to add a further 400,000 barrels a day into the market. The base expectation is that will happen. OPEC was very worried about the impact of the delta on demand in China, but those concerns have started to dissipate in recent days as the Chinese appear to have got those outbreaks more or less under control.
Well, how much do we, when can we understand actually the damage to refineries? So there's the offshore, which seem untouched. What about refineries?
Yeah, I mean, that will take a bit longer. I think as we get into the US day to day and people get back to the plants and they start turning them back on and reactivating them after the shutdowns for the refinery, they'll understand whether there's been widespread flooding or any of those units have been damaged. So that's a process that's likely to take a few days.
Well, thank you so much. Bloomberg's executive editor for energy and commodities, Will Kennedy. Now, this is what the market is looking at. First of all, it's a big week when it comes to data. Not only do we have Chinese data today that really disappointed the markets, but I would argue it's all about the U.S. jobs data later on Friday. Now, I'm looking at U.S. equity futures. They're still climbing. Remember, yesterday, we once again had a record high. Now, it's been guided by support of Fed policy, but also rebounding corporate earnings. Treasuries extending gains made after Jay Powell had made measured comments on Friday. Global stocks really are set for a 7th monthly advance on strong company profits, expanding vaccination programs that are underpinning economic reopening and moderate monetary policy. The only downer is actually what we're seeing with some of the Chinese data that we'll talk about at length. Bloomberg Surveillance Early Edition continues in the next hour. Matt Miller joins me out of Berlin, Lisa Abramovitz out of New York. This is Bloomberg.
会場に行って観戦するということも難しいお子さんがいるんです。このように冷房の効いた香港の体育館の中で、それこそ大会の最前列で観戦ができる、体験ができる、こういうことをとてもありがたいことだなというふうに思っていますし、この技術に感動しています。予想以上に子どもたちの反応が良かったというのはですね、とても校長として嬉しく感じております。この子どもたち、どれだけオリンピックの心待ちにしていたのかっていったことがよくわかるような今日の表情です。
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
The power of Bloomberg.
Let's get the session started and wrap up the trading week.
News.
Who knew that one earnings story could tank the entire market? There's upward pressure on wages.
Analysis.
This is really a slow, ongoing implosion.
Context.
Is there veracity to this granular data of ADP?
It's an ugly report.
The power of the Bloomberg terminal. The power of Bloomberg television and radio.
Tesla's the one that we got our eyes on.
Bloomberg has it covered.
Trading revenues coming in better than expected. Everything. Cash, $1.4 trillion of cash. One of the most notable aspects of this report that was stellar.
There's still a lot of momentum in the economy, but we are seeing some headwinds from the Delta variant.
The real question mark, if you want, in this moment is more Asia than any other continent. The supply side is the one which worries me more.
It's a broader question that investors are asking themselves, whether and how to invest in China in the next, let's say, couple of years, where you could still have a surprise in terms of regulation at any time. And, well, the short answer is that investors have become a bit more cautious.
This is Bloomberg Surveillance, early edition, with Francine Lacqua, Matt Miller, and Keely Lines.
It's 10 a.m. here in London, 11 a.m. Berlin, 5 a.m. in New York, and 5 p.m. in Hong Kong on this Tuesday, August 31st. Our top stories today. China's economy takes a double hit from Delta. The latest coronavirus outbreak hurts both manufacturing and services. It's the end of America's long war. After 2 decades, the final U.S. military personnel leave Afghanistan. And Apple's space race, well, future iPhones will have satellite capabilities so you can send messages in areas without cellular service. I'm Francine Lacqua here in London, Matt Miller in Berlin, Lisa Abramovitz in New York. Kaylee Lines is off today. Lisa, the markets. I mean, we saw another record on Wall Street yesterday, kind of filtering through here in Europe, but despite Asia taking pause for breath because of that not so encouraging Chinese data.
Well, that's where I wanted to pick up that PMI data that showed a real slowdown, particularly in services in China, actually showing a contraction for the first time since first quarter of 2020 when they first started to put in restrictions due to the pandemic. And you did see somewhat of a response, but it really shows how in China, so much of the response has to do with the policy response. You can see the Shenzhen now barely down, just down about 0.2%. Earlier in the session, just to give you a sense, it was down as much as 1.5%. You're not seeing the same kind of read through over in Japan, despite some potential tempering in trade data over in Japan. You see the Kospi up nearly 2%, 1.75%, the Nikkei up 1.1%. If you take a look, though, at what's going on across the world, in the United States in particular, we are geared up, Francine, for our 54th record high for the S&P 500 this year, should it keep these gains that we see right now. We're at 45.35, up about 0.25% right now. And really, I just can't emphasize, it bleeds upwards. If it's a slow day, it means that you're going to just creep higher as the day continues. 10-year yield somewhat lower, and I wonder how much this is really propping things up. People kind of getting on board with Fed Chair Jay Powell, 1.275%. The dollar, a little bit of weakness, continuing that weakening trend that we've seen all week. This, though, to me, is probably the most interesting data point, Matt. I know it bleeds into some inflation data that you got right now. Aluminum rose about 2% to the highest in 10 years on the London Metals Exchange. So far, year to date, Matt, 40% gains for aluminum.
Wow, that's an incredible run up, but we've seen incredible runs up everywhere. As you point out, so many records. It'll be a record number of record highs this year. The second most record highs that we saw, Daniel Curtis, our New York producer, pointing out to me, 1995, we saw 51 record highs, but we're only in August. It's still August, right? It's not September yet, so it's pretty incredible. I wanted to show you the gains that we're seeing here in Europe very quickly as I give you the inflation data. We're looking at inflation now, 3%, just coming across the wire on the Bloomberg terminal. That's the highest since 2011, and the estimate was for 2.7%. So higher inflation than had been anticipated, and that does not slow down the gains we're seeing across Europe. You're seeing big gains, more than 1% in Portugal, but we're seeing 0.6% here in Germany, a little bit less in France and in Spain, and The UK is down. They have to play a little bit of catch up today after a day off yesterday. Take a look also what we're seeing in terms of some of the other asset classes. Most notably, I think the euro and the pound, both gaining some ground against the dollar. Not as much in the UK, again, as we're seeing in Europe, but the euro right now up to 118.25, Francine, so making some pretty decent gains.
Yeah, decent gains. I have to say, for the inflation, first of all, you know, it could be a temporary increase because of the sales tax last year, as well as some early summer sales across the block. But it's supply bottlenecks that worry economists that could actually take hold and then push inflation higher for longer. Now, a look at what else is going on today. The top brass and Merkel's conservative bloc is holding their annual economic summit alongside some of Germany's key business leaders in Berlin. Joe Biden gives an address on Afghanistan a little bit later. We also have some U.S. data out. This includes the FHFA House Price Index, that's Chicago PMI, and the August Consumer Confidence Index. And then it's the start of Elizabeth Holmes' criminal trial. The Theranos founder is facing up to 20 years in prison on charges that the blood testing startup she created was actually a massive fraud. Now, over to China. The economy took a hit from the Delta virus outbreak this month. Bloomberg's Ritika Gupta joins us with the latest data. Ritika, it's clear the data was disappointing on all fronts.
Yeah, Francine, we certainly do have reasons to be bearish here because we're starting to see that Delta variant really starting to show up here in the data. We had quarantines coming back, travel restrictions, also supply-side constraints. We had that Ningbo port being shut, so a lot of these feeding into the data. So you see the PMI for manufacturing, that's slowing to 50.1 from 50.4 in July, but it was really that services PMI that stands out here. We actually contracted for the first time since February of 2020. That was at the height of the pandemic, to 47.5 there. So a big concern here, but the question really is this just a short-term snag? Or is this a long-term slowdown that we're starting to see?
Well, and what are some of the tools policymakers might use to try and turn it around, Ritika? Would they go as far, for example, as a rate cut?
Yeah, Matt, I mean, this certainly does give policymakers room to ease here, but as far as a traditional rate cut, that might be going just a little bit too far for them, because we know they have these new structural reforms that they want to put in place. They want to reduce inequality. They want to reduce household debt. That cutting interest rates might not necessarily support as much, but what they might do instead is boosting liquidity measures. So there's a lot of chatter about the cut in the reserve ratio for some of those lenders, and also more fiscal spending going into that second half of the year, Matt.
Bloomberg's Ritika Gupta, thank you so much for that update. Let's move over to Afghanistan. The United States officially ending its military presence in Afghanistan yesterday with the final flight out of Kabul, concluding 2 decades of American involvement. U.S. Secretary of State Antony Blinken spoke at a briefing yesterday about the future of U.S.-Afghanistan relations.
Now, U.S. military flights have ended, and our troops have departed Afghanistan. A new chapter of America's engagement with Afghanistan has begun. It's one in which we will lead with our diplomacy. The military mission is over. A new diplomatic mission has begun.
Joining us now from Washington, D.C., Jack Fitzpatrick, Bloomberg government reporter. I know that President Biden, is going to speak today at 1:30 p.m. Eastern time. Do we have any sense of what message he plans to send?
Well, when the president has spoken about Afghanistan, he has taken the broad view and typically justified the decision to pull out of Afghanistan, sometimes to the frustration of critics who says he hasn't really publicly discussed the details of the messy pullout in the short term. I think one thing to watch for that Secretary Blinken didn't really get into the specifics on, but that General Kenneth McKenzie raised yesterday, was that the number of American citizens who still have requested to leave Afghanistan is somewhere in the low hundreds. That's a low number compared to the fact that the U.S. has evacuated more than 120,000 people the last couple of weeks, but there are still some Americans left. So I would say that's probably one of the top questions that we're going to look to see if the president addresses what the U.S. is going to do with those people. But really, mostly the president has taken the broad view on pulling out from Afghanistan.
Jack, President Biden also vowed to support Louisiana and Mississippi with aid because of Hurricane Ida. What more can you tell us?
Not a lot right now on the details of how the federal government is going to get involved, just because we're still in the early stages Some of what the federal government can do is sending generators to areas where the power is out, which still is, according to Entergy's map, just about the entire city of New Orleans. But we don't have a real damage estimate. And a lot of the time, what the federal government does to respond more in the long term to a hurricane that is really, really destructive is not only FEMA money and that initial push, but a longer term rebuilding effort. And right now, it doesn't appear that the federal government knows the exact extent of the damage, especially with so much power out. This is a bit of a long-term issue, and it could be a matter of weeks rather than days before everybody gets power back. So we're going to have to wait a little bit to see exactly what the federal government does in terms of more of a rebuilding process to the areas that got hit the hardest. But there are some initial measures that the federal government is doing, such as working with the electricity providers to try to get everything online as fast as possible.
Jack, thanks very much. Jack Fitzpatrick there of Bloomberg Government giving us the update on the Afghanistan situation and hurricane, now Storm Ida. Let's get to tech. Apple plans to add satellite functions on future iPhones. The push will focus on emergency situations, allowing users to send texts to first responders in areas without coverage. Let's get more on this with Bloomberg's Matt Bloxham. Matt, you know, I've had a GPS device that can do this for years, but Apple is now going to include it in a very small package. Are we going to get this on the next iPhone in October?
Well, it seems that way. I mean, we won't know for sure until they actually release the device, but certainly the rumors seem strong enough that that's likely to be a feature, and, you know, it could be a relatively modest upgrade to the existing chipset if they use the Globalstar network, which works on typical cellular technology anyway. And as you said, you know, potentially initially focus on emergency services, but over the longer term, it could be a more exciting feature to kind of work with some of their fitness and health functions. As you said, companies like Garmin already have this kind of product out there in the market, so it could be part of a roadmap that takes them in a number of different directions.
Is Apple going to become a space company? Are they going to try to send satellites up themselves so that they can just bypass the current infrastructure up there?
I mean, it's possible. I mean, historically, you know, that there's plenty of opportunities for them to have built a mobile network on Earth, but they haven't chosen to do that. There are plenty of companies sending satellites up there. So I imagine for now, at least they will continue to focus on the hardware they're putting into people's hands rather than putting satellites up. But you never know. You can never rule anything out. They've certainly got the financial firepower to do that if they wanted to at some point in the future.
Yeah, they certainly do. I think that it was another record high yesterday. Matthew, thank you so much. Bloomberg's Matthew Bloxham. Now, coming up, Carsten Bretzky, ING Germany chief economist, and then a little bit later also on China, Diana Cholieva of Enodo Economics. This is Bloomberg.
You can now fly into the UK from the United States. What about some reciprocity?
No, so the opening up by the UK government was terrific. We saw, in fact, the day that it was announced, we saw our daily new bookings triple between JFK and Heathrow. So that was great. And as a US-based carrier, honestly, most of what we're going to sell is going to be in the US. So that was great for JetBlue. The US government should open up. There is no reason not to. You know, you can fly from countries that have much higher COVID infection rates, but you can't come from countries in Europe where infection rates are much lower. That is not a risk-based approach. When it's going to open up, I couldn't tell you. It's something that we and the other airlines in the US continue a dialogue on with the administration.
By Christmas?
I mean, hopefully even sooner than that. But of course, I don't really know. It's really hard to predict how they're thinking about it.
People
People ask me all the time, what is the key to being a really good investor? And I tell them it's to surround yourself with and work with the best investors you can find. On Bloomberg Wealth, I'm going to take you to meet the greatest investors in the world, the people that I would like to have managing my money.
You know, you pursue a career in what you're naturally passionate about, and that will improve your odds of achieving success.
This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua in London, Matt Miller in Berlin, Lisa Abramovitz in New York. Now, European Union countries have voted to impose fresh restrictions on non-essential travel from the U.S. amid a surge in coronavirus cases. The curbs have been lifted or had been lifted in June. Governments of each member state now have the final say on accepting proof of vaccination to waive restrictions. Let's get straight to Sam Fazeli, our Bloomberg Intelligence senior pharmaceutical analyst who joins us. Sam, first of all, what's the rationale behind this? So if you have Delta in Europe, if you have Delta in the U.S., but actually you have critical vaccination, does it really warrant, curbing those travelers?
Honestly, Francine, and good morning to you all, I don't see this as a data-driven necessarily. I mean, there's one bit of data that worries me about the United States, and we can come back to that. I think this is much more political because, the Europeans enjoyed the tourism from the U.S. for a couple of months while they relaxed it, and now the U.S. has not reciprocated, so it doesn't really make much sense to keep that door open, especially when you don't have many more visitors coming for holidays. So it's easy to close it and say, look, go back and revisit, please, and either you let Europeans in or we just keep these borders closed.
Right. It should be pointed out, of course, that this is just a recommendation from the EU. Americans are still welcome to come here until individual countries make their decisions, and they may say you can come as long as you're fully vaccinated. So we still, and we don't even know when. It could be months until these decisions are made.
Yeah, exactly.
What is the science, what is the data about the U.S. that disturbs you right now, Sam?
Yeah, I think what I don't like, Matt, is looking at the positivity rate. When you have 14%, 15% of people who testing positive, as opposed to 4 or 5% in Europe, UK, or even lower, that tells you that there aren't enough tests being done, that in reality you might have a lot more infections than you think you do. And that is where you start worrying. So when you're already at a several hundred per 100,000 infections per day, and then you have such a high positivity rate, then that does worry you. And also, let's not forget, vaccinated people can carry the virus. But I don't think that, there's not that volume of people coming from the U.S. that's just going to make a massive difference to our case counts in Europe,
yeah,
right?
Sam, that's exactly where I was going to go. This idea that travel bans have not been that effective in the past. I mean, how do you sort of put travel bans in the perspective of the scientific rationale behind trying to prevent the spread?
Yeah, can I use a phrase here? I'm sorry. The best phrase that comes to my mind is that it's all rubbish, right? It's all political. Why is the UK? How is the UK's day 2, day 5, day 8, pre-test, vaccinated, quarantines, red list, has done nothing? If you compare the UK with France, they have the same positivity rate, and the UK has got a higher rate of infections. So what has all this stuff actually achieved? Nothing, right? Now, you could, of course, say, Sam, you're looking in the rearview mirror. If we had not done that in the UK, we would have had much higher case rates. But I don't think that data really, that view bears out when you look at what's going on in France, which has had relatively open borders. So where is the problem?
Okay, Sam, I need to ask you about boosters, but I also want to ask you about variants. I mean, are we actually seeing new variants that could be dangerous where vaccinations could not work to fight them off?
The answer to that is a simple no. Not yet, at least. I mean, this is science. Things change all the time. This is a virus. It changes all the time. There are always some variants that will be occurring here and there. So the data to date suggests that there's no new variant of concern to worry about. If it does come, it will be very quickly discovered, just like Delta was a few months ago.
So, Sam, in the meantime, we hear the CDC is down in Washington, D.C., discussing the potential for booster shots. We've heard 8 months after full vaccination to get that booster shot could bolster protection. What's the latest science on whether we'll all be getting booster shots in 8 months or even sooner?
Yeah, that's a complicated one, and I'm in the middle of writing up a note that uses quite a lot of the information that they provided last night on their CDC meeting. I think the principal issue here continues to be that there are some groups of people who do need a third shot. And I continue to believe, which is what was discussed last night too, that we don't necessarily know that the vaccines that we developed are genuinely two-dose vaccines. We did the trials that we did with 2 doses, with short intervals between the 2 doses. That's because that's what we needed to do, to get a quick answer. Do they work? And if they work, can we use them quickly? And the answer was yes, and they were safe. Now, we are figuring out what we should have figured out in a much longer-winded development program as to whether these are 2-dose or 3-dose vaccines. And that's where we are. And I think that we will end up with people needing or taking at least a booster shot.
Sam, thank you so much. Bloomberg Intelligence's Sam Fazeli on COVID vaccinations and, of course, booster shots. A little bit later, we'll also speak with Dr. Amish Adalja, Johns Hopkins Center for Health Security Senior Scholar. That's at 6:30 a.m. in New York, 11:30 a.m. in London, and this is Bloomberg.
What do you predict the Taliban will do in the coming months and years?
I would say consolidation of their power and gaining international legitimacy and recognition. This is the priority for the Taliban, not supporting transnational jihad, not basically in any activities outside of Afghanistan. If you really watch carefully what the Taliban have done in the past few days, they are engaged in a public relations offensive. They are trying to convince the world. I mean, if you listen carefully to what they're saying, you think that the Taliban are newly born Democrats. They are peacemakers. And the reason why they want to consolidate their power, they want to convince the world that the Taliban have changed.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Happening on the ground right now, just in terms of consumer price tolerance?
We see a strong consumer right now, and you can see that even in the early starts to back to school and back to college season that we're really pleased with. And I think if we step back and look at the quarter, we see the evidence of that strong consumer.
really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua in London, Matt Miller in Berlin, Lisa Abramovitz in New York. Now let's get straight to the Bloomberg. First word news, and the U.S. military presence in Afghanistan has ended after nearly 2 decades. The final flights carrying American troops left Kabul yesterday after an evacuation of more than 123,000 people. Some Americans who wanted to leave Afghanistan were not able to get to the airport in time for the military to fly them out. New Orleans managed to escape the floods from Hurricane Ida, but it now faces days or weeks without power. It's not just New Orleans. By Monday evening, more than 2 million people across the region still lacked electricity. Now, meanwhile, the system of levees, floodgates, and pumps installed after Hurricane Katrina devastated the city in 2005 passed their biggest test. In China, President Xi Jinping chaired a meeting in which he approved measures to fight monopolies, battle pollution, and shore up strategic reserves, all areas that are crucial to his government's push to improve the quality of life. Well, Xi and other top Chinese officials have been emphasizing the need for high-quality development. And Zoom is raising concerns that it will have problems keeping up its rapid revenue growth once workers return to the office. Now, the company gave a sales forecast that fell short of some analyst estimates. Zoom's video conference platform became an ubiquitous tool for work and school throughout the pandemic. I mean, I feel like I haven't met one person, Matt and Lisa, that's not Zoomed out at this point. So I don't know whether it comes back, but people want to have in-person conversations.
I think, though, that this is not just an issue of people's being Zoomed out. Look, everyone hates Zoom. That little delay in between a conversation, it's killer, right? But I think that there also is just so much competition, and now people have a chance to ramp up and do comparisons. I mean, Matt, do you hear about Zooming, or do you hear about something else?
I don't. I haven't used Zoom. I've only used Zoom like 3 or 4 times throughout the entire pandemic. I use FaceTime quite a lot, and I use our own internal Nexi. I don't know who makes Nexi, but I use the Nexi system a lot, and I love it. Okay, I don't have a problem with that.
That's in a bubble, basically, Francine. That's what we just learned.
Yeah, I mean, I definitely have used, like 3 times, maybe an hour Zoom over the last 18 months. How many times have we said, "You are muted, please unmute"? Actually, I heard about a kindergarten, child being given top marks because she knew how to unmute her.
Can I just say, with remote school, the kids have all learned how to fake out their teachers to basically replicate internet disruptions and things so that they can bow out of class. It's become a thing.
I know. I mean, they're all into coding now, thanks to all of this. Coming up next, we talk about the economy with Carsten Bretsky from ING Germany. This is Bloomberg.
right now, about half of U.S. households invest. We'd like to get that number up to 95+%. Investing should be as ubiquitous as shopping online. It should just be something that people do.
Every Friday with 30 minutes dedicated to fixed income, I'm Jonathan Ferro. This is Bloomberg Real Yield.
This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua in London, Matt Miller in Berlin, Lisa Abramovitz in New York. Katie Lyons is off today. Now, Matt, if you look at the other record, yet another record on the U.S. equities, actually it's filtering through to Europe. Data from China a little bit worrying, but actually it seems that equities are brushing it off today.
Yeah, equities seem to be doing quite well. I mean, not in London. You had the day off yesterday. You didn't have the day off, but the FTSE was closed for trading, and now it's playing a little bit of catch up to the downside for some reason. But we have gains that continue to get better and better. In Germany, now up 0.7%, more than 100 points on the DAX to almost 16,000. So yeah, it's a year of record highs for equity indexes, and the question is, when does that turn around?
The million, trillion, gazillion dollar question.
Maybe it never has to. Maybe it never has to. If you look at a long-term chart of the S&P 500, it's happened. It's gone up forever. So,
Forever. I would argue that at some point it does have to, but today's not the day, Lisa.
That incredible technical analysis. You see it going up. It just keeps going up. Let's take a look, though, what you are seeing today. It keeps going up. We have seen a lift to markets and a potential for a 54th record high for the S&P 500 should some of the gains continue. We're seeing the S&P up 0.2% to 45.35. Interesting to me, the 10-year yield actually was lower earlier in the day. Now has creeped a little bit higher, but still 1.28%. It is incredibly low. And it seems like there is a certain degree of complacency in the market right now that, yes, the Fed is going to taper, and no, it won't matter to bond yields. And how much is this providing a support to the overall market for risk assets? And crude actually a bit lower following on some of the losses that we saw yesterday. This comes ahead, Matt, of the OPEC Plus meeting that we're going to have tomorrow. And we're expecting perhaps some cuts in production. How much will the price that we've seen recently filter into that decision, Matt?
All right, so we'll definitely continue to keep an eye on that, especially considering the storm and what happened, what didn't happen there. The effect of that on commodities could have been greater. Now, here in Germany, the top brass of Angela Merkel's conservative bloc is holding its annual economic summit alongside some of Germany's key business leaders in the capital, in Berlin. The economy is traditionally a strong suit for the CDU, and this is an opportunity to put those credentials on display as they slide in the polls. Bloomberg's Maria Tadeo joins us on the ground with some reporting. So, Maria, what does it look like?
Well, Matt, here they're really trying to cling on to this idea that this is the CDU. We have the credentials. This is a party that works for the middle class. It's a party that will support Made in Germany. But if you look behind the scenes, there is a sense that this may not be enough this time around, and particularly for one fundamental reason. They're competing against the finance minister, essentially. That is Olaf Scholz, and he is the man that over the past year has been overseeing the stimulus for coronavirus. He was also the man that put in place the furlough scheme in Germany. And also just a few weeks ago, he went to the flooding site, which was such a traumatic event for Germans. And he said, we're going to rebuild everything that was destroyed, no matter the cost. At the same time, in the same region, Armin Laschet was caught on camera giggling, joking around. That's continued to haunt him. So they're competing against a tough rival on that. And that is still being cementing in the polls. We had another one yesterday by Bild that's putting the SPD now firmly in the lead. This is not about a tight race, but now a firm lead of 5 points over the CDU. It's their worst result in INSA poll, by the way.
I mean, the million-dollar question, Maria, is, of course, what is Olaf Scholz doing right now? Or maybe what is the CDU doing wrong that they can maybe get back on track on this economy day?
Well, you know, when you look at Olaf Scholz, the one thing that's becoming very obvious now in the campaign is that he is presenting himself as the man that has the credentials and it's the man that will offer that continuity from Angela Merkel. Angela Merkel's approval rating is still very high. Germans are also used to her 16 years, and he says, if we want to continue on that track, it will be me. I'm the candidate that's actually the succession, to some extent, to Angela Merkel. So they're still kind of playing up that big card. The CDU, however, they continue to say, and this is something that we've been hearing today, is that fear factor about an SPD kind of left to the left coalition. That is a card that they will play going forward, saying when you vote for Olaf Scholz, you're voting for what could be a very left to the left coalition. By the way, the SPD says that's an exaggeration. They haven't ruled anything out, but this is something that the CDU keeps repeating. You don't vote for the person. You're voting for a party and potentially a coalition that is much to the left than Germany has seen in the past few decades.
Yeah, that better be their mantra right now, especially with Armin Laschet running. Maria Tadeo, thanks very much for joining us. Let's get to Carsten Breschke right now, chief economist for Germany at ING, joining me in the studio. So obviously the CDU wants you to vote for the party, not the person, since they have this candidate. And Olaf Scholz is painting himself as a successor to Angela Merkel, since Germans like her well enough. She's done okay, and he's done okay, right?
Now, remember that Angela Merkel, I think 4 or 8 years, went into the campaign saying, you know, why should you vote me? Because you know me. And this is
We're familiar with each other.
This is the same slogan that Olaf Scholz could use right now. And while Merkel always put her CDU much more in the political center, and kind of overruled or made this right-wing conservative part actually forgotten, Olaf Scholz now does the same to the SPD, namely he makes the left wing totally forgotten and says, here I am.
Now, it's a good point, but then there's this concern that popped up in the debate for most Germans that he would be willing to make a coalition with the former Communist Party. Is that a real possibility?
I think, when you're honest, it's probably the only possibility that Scholz has realistically to form a coalition. And, you know, because everything is possible, that's the disclaimer. But I don't see the CDU joining any SPD-led coalition. I also find it hard to see the Liberals, which might be needed for Scholz to form a coalition without the CDU, also to join a coalition.
So he can't make a coalition with the CDU, he can't make a coalition with the FDP.
So then what's left?
And you're saying the only thing left is, well, the Greens, obviously, and Die Linke, the former communists.
Yeah, so it still depends. You know, let the Greens win a few votes, and maybe it could be enough to just form a two-party coalition. But in the constellation of three parties, probably the only really realistic option for him to come in as chancellor might be a left-wing coalition.
Right. So, Carsten, first of all, how stable is the SPD lead? And if he does have to have a coalition with the far left, what does the economy look like?
Well, how stable? This is very, very hard to tell because all these polls are very often internet-based polls. When you look at, you know, who are the voters of CDU, also of SPD, it is very often the elderly people, and I don't know whether this is really fully captured by the internet polls. That is one thing. And clearly, the lead of Olaf Scholz right now is his personal lead. It is not necessarily the SPD's lead. What I think is interesting that we will see more and more people going for early votes, for mail votes, and this is already happening. 4 years ago, we had actually 30% going for mail votes. This time we will have 40 or 50%. So therefore, this lead could be a kind of self-enforcing lead. So therefore, it could be stable. But in the end, these margins are still error margins, and almost everything between at least the three parties is possible.
So it seems that actually everything's at play at the moment. Can you talk us through, you know, the worst case scenario for the markets and for the economy and the best case scenario?
Well, I guess the worst case scenario for the markets, the morning after Election Day, will be that we don't know anything, that so many things are possible, and that we will then just look into a very uncertain future of all kind of different negotiations. Probably from a market point of view, a very left-wing oriented coalition, so which would be the SPD together with the Greens and the left-wing party, could be seen as the worst outcome for financial markets, as it means higher taxes, probably also means less fast, structural change of the economy. The best thing for Germany from a market perspective would be the CDU and the Greens together, either with the SPD and the Liberals, because this would be a coalition which would bring about more investment, more structural change, without going to the extremes.
Carsten, it's fascinating to be having this discussion right after getting a German inflation read that was the highest since 2008. We just got Eurozone inflation coming in at the highest since 2011. I'm old enough to remember when Germany actually cared about inflation. How is this playing into the election?
Well, I'm old enough as well, I'm afraid. It is not playing into the election. So we only saw with the last Sunday's discussion that actually this campaign moved towards content and context. Before that was all about personalities. The content discussion so far was not about prices or inflation. And we had, I think, the most interesting thing is, will the candidates give an answer to whether or not this fight against climate change will lead to higher prices, to higher costs or not? Until now, they all refuse that it will bring higher costs and hence also higher inflation.
Carsten, thank you so much. I feel, without talking about age, even like 15-year-olds in Germany get reminded when it happened that they had a lot of inflation. Carsten Bretsky, their chief economist at ING. Now, coming up next, we speak with Diana Choileva, Inodo chief economist. That's on inflation. That, of course, is also on foreign policy. This is Bloomberg.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
The growth story in cannabis remains very strong, even after the sort of loosening of the pandemic. There was a worry that there might be wallet spend competition, but so far the cannabis sector seems to be holding up very strong.
This is Bloomberg Surveillance Early Edition. I'm Matt Miller in Berlin with Francine Lacroix in London. China's economy took a knock from the Delta virus outbreak this month. The services industry shrank for the first time since February last year. And manufacturing was hit by supply chain problems. But beyond the virus outbreak, China's economic recovery is also showing signs of faltering in the wake of recent regulatory crackdowns. Joining us to talk about this is Diana Choileva, chief economist of Inodo Economics, an independent macroeconomic and political forecasting company that focuses on China, one of our China experts we go to on these issues. Diana, yesterday's announcement on video games, they don't want teens playing video games more than 3 hours a week or more than 1 hour a day, Friday, Saturday, and Sunday, struck me as kind of a dangerous thing for the Communist party to do? Aren't they making an enemy out of an entire generation?
Well, in Xi's China, the path ahead is clear, and the spiritual opium, if you use their terminology, of video gaming is not part of it. I think investors have to be clear about the fact that there has been a sea change in China's growth model and how she is going to run the economy. It's all about redistribution of income and achieving socialism with Chinese characteristics for a new era. It is not about getting rich is glorious, quite the opposite. And that puts investors in a very difficult position.
All right, well then, what could be the next shoe to drop, Diana?
Well, this is the problem. What could be the next shoe? It's very difficult to predict. I mean, I would say there is one clear-cut answer, and that's housing. She has been maintaining that housing is for living in, not for speculation, but understand by speculation long-term investment in the case of the Chinese, because they have very few options where to achieve growth, long-term security and growth of their wealth. And housing is where the majority of their wealth is stored. And of course, that creates social problems because as house prices increase, and in China, it's all about capital growth, not rental income, then of course, that puts even a bigger wedge between the poor and the rich. So the Chinese have not really been paying too much attention to that mantra, which has been going on for at least 3 years. All of this that is happening right now is not new. The time was a bit difficult to pinpoint, but housing, I'd say, is next.
But it seems, Diana, and good morning, you know, the Chinese president at the moment is cracking down on everything. So maybe it's not so surprising to China watchers over the last 5-6 years, but it could come as a surprise to a lot of investors. Is there a danger that they overcurb, that they over-regulate, and actually pulls the Chinese economy significantly lower?
Well, first of all, it's important to say that for the Chinese Communist Party, what foreign investors think and what foreign capital would do is last on the list. Internal security, stability, and by that understand both from the perspective of national security, but as well the Communist Party keeping its hold on power, that trumps everything else. And what's going on right now, it's a lot more about that. It's about addressing you know, if you think about it, China as a socialist economy is one of the most unequal economies in the world. It doesn't sit well with what the Communist Party sees as the way things should be. And they're prepared to take the risk of achieving a short-term hit to growth as they see it, at the, you know, hoping that they will give to the vast majority of the population what they want. I would argue, though, that this could turn out to be a very significant headwind for growth over the long term, but at the moment they're keen to progress down this route.
But Diana, so this is basically anti-capitalistic crackdowns. Is it? I mean, if we characterize it like that, what does it mean for the U.S.? What does it mean for U.S. businesses in China?
Well, first of all, you have to understand that this also comes in the context of this all-important great power competition between the Chinese and the US. And those are two competing ideologies, both in terms of economics and politics. The Chinese have always been on the route of decoupling themselves. They just coupled with the world in order to catch up, to achieve the growth that opening up helped them to. Now it's the opposite direction. They're closing up, trying to produce everything internally. And life has become very difficult for US companies, especially in areas of significance to national security already for the past 5 years. And it will get worse. I mean, essentially, it is either with the US sphere of influence or with China's sphere of influence. It will be very difficult to straddle both.
All right, interesting to see that it has to be one or the other. Diana, thank you so much. Diana Troileva there, chief economist at Inodo Economics. Now, tonight on Bloomberg, gold, crypto, and much more. Billionaire John Paulson shares his investing insights on Bloomberg Wealth with David Rubenstein. That's at 9 p.m. in New York, and this is Bloomberg.
The July jobs report was strong.
This is an across-the-board favorable report.
More money, more hours, and more people working.
Wages up.
We're seeing our economy moving forward.
Unemployment down.
The unemployment rate declines by 0.5%.
But will Delta hit the brakes on the momentum?
We could still see the consumer become a little bit more skittish.
A lot of kind of negative surprises focused really on the Delta variant.
Tune in for the August jobs report, Friday on Bloomberg Television and Radio.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua in London, Matt Miller in Berlin. Now, we're also joined by Tom Keene, co-anchor of Bloomberg Surveillance, who will dazzle us, Tom, good morning, with a wonderful chart.
Yeah, I don't know what housing's like in Berlin or London, but I know what housing's like in America, Francine, and there's basically a true frenzy. Doesn't matter which geography you look at. Case-Shiller is a delayed series. We're looking back here. We see Case-Shiller this week, and we're looking back not 1 month, 2 months, but we're looking back a good number of months, and it's a stunning chart. We are extended out from the frenzy of 2006. We all love and remember that. And far more the path from the pandemic of up 3-4% per year growth in housing prices is now ballooned out to 16%. You just wonder, you know, trees to the sky, Matt Miller, you wonder where this goes.
Yeah, absolutely. And to me, the most fascinating thing is we see prices soaring. Everybody, it seems, wants to buy a house, but there's not much inventory out there. And yet, when we talk to people about mortgages, when we talk to people about credit levels, it seems like it's very different than what we saw in 06 and 07. And the main difference may be that investors are really coming in to buy single-family homes to rent out.
Yeah, there's a geography thing here, and Blackstone's made a big splash with that. I would go to the Dallas Fed. Robert Kaplan talking to Michael McKee a few days ago, and Dallas is really looking within their research at this. And their key question, Francine, is does the price of a house roll over to an assumption of increased rents? And the answer, it does. If you get higher house prices, rents follow along, up, up, up.
Yeah, not always, actually. And this was one of the great things about the pandemic, Tom, that if you look at some of the houses here in the UK, rent did not follow because people chose to either buy or stay away because rent was still too expensive. So you saw that the price of houses in the UK actually rise and the price of rents fall. Yeah. I know it's a little bit quirky, and again, we're in pandemic era.
Yeah, and I'm looking here at the Bloomberg terminal, Matt. I logged on today. I got on. It's amazing. And, you know, I look here at real estate up, and guess what? Equity's up again today after what we saw yesterday. Just extraordinary.
Yeah, equities continue to rise.
Always record. Tom Keene, co-anchor of Bloomberg Surveillance. Matt, what are you watching for the rest of the day?
I'm actually watching Apple. I'm pretty excited about the latest from Mark Gurman. He's our Apple whiz kid out of the San Francisco office. And he broke some news that Apple may be looking to put satellite texting capabilities into the new iPhone. I say it's about time. I've had a Garmin InReach Mini for years that I use when I'm off the grid and I might need to text with satellite capability. It'll be good to leave that thing at home and just bring my iPhone with me. The only thing is, apparently this may be only for emergency use, and I think it's pretty cool to have satellite texting features for anytime use. But looking forward to seeing what the new phone brings.
I mean, it could come. I know there's many, many rumors also of them possibly buying. They have the cash of possibly buying other things that could make that possible. Matt, this is what I'm watching. So it's Hurricane Ida. Now, we know that it's actually less violent than we thought it could be, but we look at oil and gas producers, refineries that fuel the U.S., and they're trying to now assess the impact on operations after the passage of Hurricane Ida. Now, if you look at the major, the list of the major oil and gas production sites that were shut and their capacity in barrels per day and how quickly they can reopen, it seems that the offshore things are actually quite easy to assess. When you look at the refineries, it could take a lot longer, Matt, which is why we're seeing gasoline prices go up.
Yeah, absolutely. It's now Storm Ida, right? Because it's no longer hurricane strength. You can see that there's still a lot of human tragedy and devastation in the area. But to your point earlier, Francine, it's not nearly as bad as Katrina had been. And it's interesting to me also to watch the Biden administration take a very careful approach in making it clear that they're going to do what they can for the people there after Bush was burned so badly post-Katrina.
Yeah, I know we'll have updates from our Jack Fitzpatrick in D.C. Now, more Bloomberg surveillance is ahead. We'll hear from John Bolton, former U.S. national advisor to President Trump, amongst others. This is Bloomberg.
A lot's happening on Wall Street.
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
I support the new framework.
We need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
There's still a lot of momentum in the economy, but we are seeing some headwinds from the Delta variant.
There's still a lot of cash that needs to find a place in the market, and that's why it's going to be very hard to see significant sell-offs.
Corporations are figuring out how to morph. They're dealing with very low interest rates. They've learned how to raise prices.
Fine. Fed does not taper at Jackson Hole, but we know that tapering is inevitable.
Chairman Powell basically said, yeah, we'll get off eventually, but not yet. That gives markets probably a couple months of runway.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Good morning, everyone. Jonathan Farrow, Lisa Abramowitz, and Tom Keene. A simulcast, Bloomberg Radio, Bloomberg Television. Taylor Riggs says she's got to stay with us until the market goes down. She's here again this morning for John Farrow. Lisa Abramowitz, what a lift yesterday in the equity markets.
It's what a lift every day. We got the 53rd record high yesterday in the S&P 500. Today we're poised for the 54th. And the interesting thing, Tom, is that it comes on lower yields. This idea that people are now getting more complacent, that the Fed has this right, that they have it under control, and that they will tamp down inflation and allow the economy to grow at a steady and yet relatively slow pace going into the future.
The big lift today as well. Futures up, and it's the way they're up, the character they're up. Taylor, you know, what's it look like from the afternoon? I mean, we're completely set on what Europe's doing, Asia following along in the U.S. morning. By the time you get to 3 or 4 o'clock, you have a different view. What did it look like yesterday afternoon?
This was interesting because we talked a lot about the Russell outperformance in the morning yesterday. All of that unwound, and you got some big underperformance by some of those classic reflationary stocks that we had seen. Tom, I hate to break it to you, but by the afternoon, the S&P 500 typically doesn't look much different. We're on track now. This is the most record highs that we've had from January to September 1st ever. As Lisa said, 53 really just highlights, well, all those buyers on the sidelines, the cash on the sidelines that we've talked about.
A 15 handle on the VIX moments ago, 16.02, saying all you need to know about this equity market. Lisa, for me, of a certain vintage, it was extraordinary yesterday afternoon to see the tweet come across in the language and the type font of the Central Command saying that we have left Afghanistan. I must admit, I sat there shocked.
I think a lot of people did, even though this was telegraphed, the idea that after 20 years, it was over, that they followed through on a timeline despite some of the turmoil, despite some of the pushback. And now the question is, what comes next in terms of either drone strikes, but frankly, in my opinion, how do we deal with allies who are not necessarily that happy with how this all went down? And then, of course, you have the refugee crisis. What are we doing with all of the people who left and are trying to find places to get settled, Tom? I mean, honestly, a dramatic cap to 20 years of fighting that ended yesterday afternoon.
And that's where we sit on this Tuesday, and of course going into 3 days towards the labor economy report on Friday. And Lisa, just extraordinary to me to see where we are. And in bonds, you see it indicated by a 130, 131 into 128. Yields don't want to go up. There's no other way to put it. Price up.
Cross currents of inflation data that we're getting that continues to increase. I mean, we got over in Europe the fastest pace of inflation going back to 2011. In the United States, we're looking at higher housing prices, and we also, of course, are looking at aluminum prices that rose to the highest in 10 years, traded on the London Metals Exchange. And this comes on the heels of some China crackdown on production in a couple of areas, in addition to higher demand. Talking about high prices, 9 a.m. we get the FHFA house price index for the month of June. The expectation is for an ongoing heat here. Remember, housing prices have grown at some of the fastest pace that we've ever seen in U.S. history. This is crimping confidence for some of the home buyers. They have been priced out of the market, and this is why you see a slowdown in sales, as we saw yesterday, an unexpectedly big slowdown in sales. How much does this read through into consumer confidence actually declining, as well as people's ability to spend? 10 a.m. we do get a read on consumer confidence from the U.S. Conference Board for the month of August. Also, the question is, how resilient is the consumer as they see the labor market continuing to revive, even in the face of the Delta variant? And then at 1:30 p.m., Tom, to your point, President Biden will be delivering remarks on the exit from Afghanistan. A monumental moment, one that a lot of military experts do support in terms of the overall goal of exiting. However, the method still under scrutiny, the path forward still highly uncertain, Tom.
It will be interesting to see the president with comments there, and of course the news flow extraordinary in this end of summer 2021. Let me look at the data before we get to our esteemed guest. I'll end with foreign exchanges, wheelhouse. The equity market, I really don't know what to say. 45.33. I'm going to give the levels here on SPX, up an additional 9 points this morning. The Dow 35,430, maybe not participating yesterday like others, up 77 points. NASDAQ 100 on a tear, 15,634. with the growth stocks away, and Russell 2000 leading out 2273, up 7 points this morning. Again, the VIX 16.02. In the yield space, 1.28% on the 10-year, 30-year bond under a 1.90. That's a big deal to me. 1.8998 on the 30-year bond. In the foreign exchange space, we give back a little bit of the range-bound dollar strength that we've seen, 92.52 on DXY, yen near a 110. Euro's what we're watching more than anything, a 118.25. He watches the euro on an hour-by-hour basis. Ibrahim Rabari, Citigroup Global Head of Foreign Exchange Analysis, but much more than foreign exchange, folding in the sum of all its part. How correlated are the markets right now, Ibrahim?
Well, they remain pretty correlated. And in fact, when we look at the FX market, one of the major cues we, of course, always take is what happens in interest rates and what happens in terms of global risk appetite. And FX has been moving more or less in tandem. That being said, for the dollar specifically, it means that it's been caught in the cross currents to a degree. As you said, it's been a little range bound over the last few weeks because interest rates in the US have been low, even as equity markets have been pushing up.
So it raises, Ibrahim, the economic question. What could potentially push the Fed to act more quickly and thus to create some strength in the dollar that could disrupt the rest of the FX world? What are you looking for in this Friday's jobs report on that front?
Well, I think when it comes to the Fed, there are actually drivers that matter a lot and drivers that matter much less. And I think the tapering question is much more in the latter category, and that was the main takeaway coming out of Jackson Hole. And therefore, we don't think there's all that much that this payroll report can do for the directionality of the dollar beyond the day itself. What is much more important is what is the outlook for the Fed's price hiking intentions. And there, I don't think this payroll report will do a great deal. So I think it'll be a time until the Fed becomes the major market driver again in FX.
That's fascinating, Ibrahim, especially when we take a look at what's happening over in Europe with the inflation print that we saw this morning coming in at the hottest since 2011, hotter than people previously expected. How much does this actually bleed into the potential for dollar strength, euro weakness, as you start to look at inflation really pick up and perhaps people recognize that in the FX world?
Yes, there are, I guess, two interesting observations here. One is, as you said, inflation in Europe has crept much higher in a way that few of us had expected. And I think that puts a spotlight on to what the ECB may do at their next meeting just over a week from now, because they themselves have to consider whether to taper asset purchases. And our expectation has been that they'll be very slow in indicating that. But I think this inflation print could, in fact, increase the urgency for them to prepare to wind down their asset purchase program. And that in turn is not so much a euro negative factor, but it could actually suggest that there's a bit more upside linked to central bank expectations from the ECB's outlook in the coming weeks.
We also saw China PMIs weakening just a little bit overnight, and I'm curious how that impacts our inflation. If they are exporting it and we are importing it, is it indeed transitory?
So I think China is in fact, or global growth more generally, is in fact right now the key question for FX. It's to some degree the debate between reflation versus stagflation. And what we got out of the China PMIs was that maybe the manufacturing part held up, and that tends to be the more important between the two. But what was striking was that non-manufacturing was extremely weak relative to expectations and relative to the previous trend. So it does raise some warning signs, but they're actually not necessarily inflationary to the degree that demand in China is falling back in line with some of the supply restrictions. We don't think that it fuels necessarily inflationary impulses that we're seeing elsewhere. But it does leave that major question open, which is, where does global growth go from here? And the one thing we know is that the dollar tends to strengthen when global growth weakens. So that, I think, is the key scenario under which the dollar strengthens in the coming months.
Yeah, Rim, in our collective memories, there are emerging market crises, Ecuador, Mexico, on and on. Do you feel like we're near great instability within selected emerging markets, or is it steady as she goes given the information flow?
So for now, we think that the risks in emerging markets are more idiosyncratic than systemic. And that's in the context of expecting that the global recovery will persist, that Chinese growth will bottom out and do okay. But this is one area where eventually Fed policy and interest rates could matter a great deal. The IMF chief economist just highlighted that the other day, that emerging markets are not in a position where they can weather a major increase in US interest rates well. For now, it's reassuring to see that US interest rates are really subdued. And under that scenario, we think that emerging markets will, in fact, be an interesting investing opportunity, including in FX. But again, it is with a bit of stomachache, because we're all a little confounded by how low interest rates in the US are. And if that changes, I think it could make the likelihood of more common emerging market crises a lot more likely.
Imran Mabari, thank you so much for joining us today with Citigroup there on dollar. And again, dollar, I'm going to just call it stunningly range-bound here, with a lot of people, a lot of different opinions out there on whether dollar, the major pairs, as well. Lisa, you noted something there that you thought was really special.
Well, I just think it's fascinating that today's inflation read out of the Euro region is perhaps something that will pressure the European Central Bank to reassess their bond purchasing program and possibly taper it. I do wonder, Tom, perhaps the U.S. taper is not a big deal, but what if you get a U.S. taper and a European taper and you start to withdraw some of this liquidity? Then what?
Well, that's the point on liquidity. I would say we're being overwhelmed by the liquidity right now, given what we saw in the equity markets yesterday.
Couldn't agree more.
We have many good conversations on that. Again, SPX up 8 points now, better than yesterday morning at this time, 45.33. Standard & Poor's 500. Stay with us from New York. This is Bloomberg on radio, on television.
With the first one news, I'm Rishka Gupta. The U.S. military presence in Afghanistan has ended after nearly 2 decades. The final flights carrying American troops left Kabul yesterday after an evacuation of more than 123,000 people. Some Americans who wanted to leave Afghanistan were not able to get to the airport in time for the military to fly them out. New Orleans managed to escape from the floods from Hurricane Ida, but it now faces days or weeks without power, and it's not just New Orleans. By Monday evening, more than 2 million people across the region still lacked electricity. Meanwhile, system of the levees, floodgates, and pumps installed after Hurricane Katrina devastated the city in 2005 passed their biggest test yet. A U.S. health advisory panel has recommended the coronavirus vaccine made by Pfizer and BioNTech that puts it on the verge of a final sign-off that would help the government and business push wider adoption. The recommendation still needs a final nod from the director of the CDC. In China, the economy took a hit from the Delta virus outbreak this month. The services industry shrank for the first time since February last year, and manufacturing was hit by supply chain problems. At the same time, confidence amongst smaller businesses weakened and consumers cut back on spending. Apple is looking to outer space for an iPhone upgrade. Bloomberg's learned the company will add satellite features to iPhones for emergencies that will allow users to send text to first responders and report crashes in areas without cellular coverage. The satellite features are unlikely to be ready until next year. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Rishka Gupta. This is Bloomberg.
Welcome to El Zonte, known as Bitcoin Beach. This little surf town on the coast of El Salvador is one of the first to go full crypto. Yep, you heard that right. Everything from groceries to coffee to salaries and community projects can be paid for using Bitcoin.
It's actually been crazy how fast it has caught on and how useful Bitcoin's been for everyday people.
Just to buy something as simple as a cup of coffee can be done quickly, painlessly.
Power of Bloomberg.
Let's get the session started and wrap up the trading week.
News.
Who knew that one earnings story could tank the entire market?
There's upward pressure on wages.
Analysis.
This is really a slow, ongoing implosion.
Context.
Is there veracity to this granular data of ADP?
It's an ugly report.
The power of the Bloomberg terminal. The power of Bloomberg television and radio.
Tesla's the one that we got our eyes on.
Bloomberg has it covered.
Are you still committed to the U.S. pickup market? You mentioned how small it is, and I know you do good business at Frontier, but a lot of times Americans want something bigger like the Titan. Is that, do you plan to stay in that market as competitive as it is?
I mean, for us, market is one thing. The second is what customer aspires for from Nissan. And customer in United States aspire for sedans, SUVs, and the pickups. And Titan is a great pickup truck, and we are, of course, focusing on the Titan. But as I said before, that in our whole lineup, our main focus is always been in the sedans and SUVs and the smaller pickup truck.
People ask me all the time, what is the key to being a really good investor? And I tell them it's to surround yourself with and work with the best investors you can find. On Bloomberg Wealth, I'm going to take you to meet the greatest investors in the world, the people that I would like to have managing my money.
You pursue a career in what you're naturally passionate about, and that will improve your odds of achieving success.
Military flights have ended, and our troops have departed Afghanistan. A new chapter of America's engagement with Afghanistan has begun. It's one in which we will lead with our diplomacy.
On an historic day, the Secretary of State managing the message this morning, Anthony Blinken, of course, the U.S. Secretary of State. This is a movable story, and we will move it forward. John Bolton will join us here in, I believe, 2 hours. Jet Fitzpatrick right now of Bloomberg Government to get out in front of Ambassador Bolton. Jack, Ambassador Bolton is completely focused on Pakistan. What will be the new United States relationship with Pakistan?
Well, you could argue that the relationship with Pakistan is even more important given the instability and the takeover of Afghanistan by the Taliban. A little hard to predict exactly what that relationship will be. A number of countries are looking at Afghanistan as a significant unknown. But I think that's something that the executive branch and Congress will have to debate over the next few months as the president tries to outline sort of a long-term vision, and the Secretary of State tries to outline a long-term vision for what this all means. This changed more rapidly than the president expected in terms of the Taliban takeover. So there's going to have to be sort of almost a rethinking of how quickly the U.S. adjusts his expectations for what the Middle East is going to look like.
Well, the Middle East, but also, frankly, Central Asia. I mean, if we expand out the geography, it's the United States. And, there's the emotion of the troops leaving and the comparison to 75. I get that. But do you detect between state and defense some form of adjustment or shift in our broader Central Asia policy?
The broad view on this, I would say, is that the Biden administration is keen to shift away from the Middle East and maybe even Central Asia, or at least Western Asia, toward East Asia. This does kind of affect that. Afghanistan even shares a very small portion of a border with China. And China's another country that sees a lot of unknown in what's happening in Afghanistan. I'm not sure that there's necessarily a regional strategy that has been clearly outlined on Central Asia, but the broad view seems to be a Biden push to have less of a U.S. presence in and around Afghanistan, in the Middle East, in Western Asia, and increase the focus on the U.S.'s relationship with East Asian countries.
Jack, in the nearer term, then sort of the broad strategy that the U.S. is affecting, there is the refugee issue, the fact that a lot of the people who have left Afghanistan are trying to get in other countries, including the United States. Has the U.S. opened their borders to these individuals, especially as the European Union tries to keep them in the neighboring countries and basically says, see if you could just do that and not really bring them here?
To some extent, yes, there are going to be some Afghan refugees coming to the U.S., and there may be some political controversy over that, although there was some preparation. Congress even acted before the U.S. fully pulled out and provided a little extra money to process the special immigrant visas ahead of time. What we're seeing now is to a greater extent than anyone anticipated a month or two ago. So the question is still outstanding in terms of exactly how many refugees are going to be coming to the U.S. And we're still in a stage in which there are a small number of American citizens who are trying to leave. So there's some blurred lines in terms of exactly what to expect with people coming to the U.S. But that was a debate that was at least partially hashed out in terms of setting the expectation that some Afghans, especially those who helped U.S. troops, would be coming here.
Jack, there are reports that the war in Afghanistan cost about $1 trillion, and now those billions and billions of dollars spent every year will be diverted to, as you say, to other efforts, including solidifying a presence in East Asia. Can you give us a sense of the nature of some of these investments, especially as the nature of war in 2021 is very different than the nature of war back in 2000?
Yeah, well, for one, it's hard to put an exact number on the cost of a war. If you look at the estimates that are out there, some of it's around $1 trillion. Sometimes you see numbers closer to about $2 trillion. It has an effect on VA spending that could go on for many, many, many years. So it's hard to pin that number down, and it could grow for a very long time, even after a war ends. I would point out, as the Biden administration tries to shift its focus, it's just proposing a little bit less of a focus on military spending, which will be controversial, already is controversial. The Biden budget proposal effectively wanted to flatline defense spending. So even as there's an increased focus on East Asia, there is a little bit of a liberal push to reduce defense spending, at least as a percentage of the American economy. That's getting a lot of pushback, and in fact, tomorrow there will be the first stage of marking up a defense authorization bill in Congress, and there's going to be a significant fight over that for the months to come as lawmakers and the executive branch try to exactly determine what this country is going to be spending on and how it's going to be spending money on the military. It's a bit of an open question, and the Biden approach has been more in line with what you've heard from the left in terms of at least mildly reducing expenditures for the near future.
On that theme, Jack, what is sort of the debrief, the takeaway going to look like from this in the coming weeks and months?
It has to play out still, one, as the number of Americans who want to leave hopefully are able to leave. That's a number that Secretary Blinken yesterday said could be about 100 or so. General McKenzie said somewhere in the low hundreds. There's going to be some further scrutiny. Gregory Meeks, who's the chair of the House Foreign Affairs Committee, recently called on Secretary Blinken to testify on the details of this pullout from Afghanistan and how it went. So there's probably going to be some congressional scrutiny on the short-term issues we've seen on the messiness with the U.S. pullout, and that's something that could last for a number of weeks, if not longer, as clearly there's a lot of pushback from both parties on how exactly this went the last couple of weeks.
Jack Fitzpatrick, thank you so much. Greatly appreciated this morning. Our Bloomberg government reporter. Headline out, the Chancellor of Germany, Angela Merkel, saying the airport in Kabul is of, quote, existential importance to Afghanistan. I'm sure we'll have much more comments on this. As Lisa mentioned earlier, the president speaking this afternoon. Jens Stoltenberg of NATO will join Bloomberg near the 10 o'clock hour. Please stay with us. Futures up 6, down futures. It's a market that can't go down. Lisa's bidding it every morning. Dow up 62, the VIX 16.10. On radio and television, this is Bloomberg.
After 16 years in power, actually, remains one of the most popular, if not the most popular, German politician ever. Who's the right person to fill those shoes?
Well, whoever is going to be filling those shoes is going to have a very hard time. Look, as the Merkel era ends, most of the certainties which we Germans, during 16 years of Merkel, tended to take as forever are evaporating before our eyes. The eternal assurance of the United States always protecting us, that's gone out with Donald Trump. The certainty that we will build an ever closer union, the EU, has gone out of the window with Brexit.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
Bloomberg Surveillance. Good morning, everyone. Lisa Bramison, Tom King. John Farrow off today. Unsure when his sabbatical ends. It has to do with the final proof of his Galleon drawdown meditation, the Farrow way. We're really looking forward to that. And John will be back, and we can really talk to him about how that book is shaped. Tom Porcelli to join us here in the next hour. We're going to really look forward to the jobs report there. But right now, with Taylor Riggs helping out this morning, Conrad de Quadros joins us. We're thrilled that Conrad could be with us. Again, an equity lift to the market, a bond lift anyways as well, price up and yield down. Taylor, why don't you do some data right now to tell us where we are after what you observed yesterday afternoon?
You asked what changes in the afternoon, and Tom, frankly, it is not much. You really saw the lift yesterday, 53 record highs. And if you think about a January to August 31st or September 1st. This has been the most record highs in any of that year that we've seen going back ever. So that just really shows you maybe the liquidity, maybe the optimism flooding in the system. It is the Russell 2000, that reflationary trade that picks up again today, is the big outperformer. Let's change up the board, because the big question is, how do you get that reflationary trade if yields aren't moving? You're still at a 129 on the 10-year, a 190 on the 30-year. Tom, I think like you said, below a 2% caught my eye, below a 190 yesterday to a 189 certainly catches my attention as well. We did get a few earnings yesterday, the first of which I want to talk about is Zoom. This is interesting. Morgan Stanley came into this report. They were pretty optimistic, but unfortunately, some of that weak guidance takes those shares down 12%. And get this, Robinhood is recovering. They were down 8% earlier. Barron's had an interview with the SEC chairman, Gary Gensler, hinted that that full ban of payment to order flow, it is still on the table, Tom.
Taylor, thanks so much. Greatly appreciated this morning. On the market lifting, on bond prices lifting, the wall of liquidity out there, Conrad de Quadros of Breen Capital. Conrad, it's something any central bank has to deal with, but we've never, ever in my lifetime seen this. Just this absolute wall of money. Let's just begin with, is the Fed concerned about the wall of money that's out there driving up asset prices?
Well, when they get asked that question, and when the debate shifts to what QE is doing to financial stability considerations, they don't seem particularly concerned, and it keeps coming back to their view that that should be addressed by regulatory actions or